What's crack-a-lacking, you guys?
What's up?
Hey, everybody. Welcome to our little club.
Welcome to the Knights of the Crypto Table.
It's a good one for it. I can go with that. Or a hexagon.
The
We're going to be instead of the round table, we got a hexagon table. We need one more person here though. We need 6.
Right.
Like when I cash out my crypto gains in the next bull market, everything in my house is going to be hexagon shaped. Like I'm just going to have giant fucking hexagon shaped mirrors, like hexagon bed. Bed, but it's like a hexagon.
How's the toilet going to work? Is it going to be hexagonal too?
Oh, of course.
Get a custom hex toilet seat or something.
Yeah.
I'll have my ass cheeks to thighs measured, so it's perfect.
Hexagon's never gonna feel so good. No, I have an octagon table. That thing needs to go.
Really?
That's gonna be the first thing. Like this octagon out of here.
I actually have a hex granite table actually in my house.
That's hilarious.
Nice.
Yeah.
Yeah, the octagon is the alt shape now.
Get this shit out of here. I'm a hex maxi.
I'm just realizing that hex lamp would have made a great Christmas tree top. You know?
Yes.
Oh, that would be
next year.
a good idea.
So I'm actually working with the guy to design a hex coin right now. So we'll see how that goes. Yeah.
Salute.
Everybody loves the Bitcoin one, so I feel like that would be a huge hit.
I think it'll be very good, and like I pretty much told him, like, if you're able to do it 100% right, then do it. But like if it's anything less than what it needs to be, then no go. And like the color transition, it shouldn't be too difficult with hex. There are coins that are like harder, but that's the main thing right now is we're just trying to work on with his guys that he works with on getting that color transition and getting that like kind of like pearlescent transition on the logo, but it's gonna look so sick.
Oh, it would look beautiful. Yeah, that would be the best. That would look amazing.
It would look better than anything out there.
Are you gonna have it?
So you're working with somebody like in the industry?
Say again?
Are you like working with somebody in the industry that like is used to like making coins like that, or let's say like the dollar coiner?
So there's a guy. He's known as like Crypto Hut on Telegram, and he does a bunch of just different lamps for different coins, and he just recently did a hex lamp for everyone. So Hexicans bought it all up instantly, and it looks amazing. It's just like RGB lights, and I'm sure a lot of streamers are gonna have it in their background. But he also does coins, and so like I started talking to him about the hex coin, send him like the 3D models and everything like that. And he has some guys that actually make the coin. So he's in the process of working with them on the prototype right now. So we're just going back and forth on designs and just making sure that everything's where it needs to be. Make sure, and the biggest thing is like I really want him to get the color transition down, because if he can get the color transition down, like it's going to stand apart from anything else like anyone has. Just like everything else with X, it's just going to kind of shine that much more bright than everything else. And yeah, so we're getting close. He's looking at 2 different suppliers right now, and they're both building prototypes. So we'll see. And then he's thinking about adding. We're only going to maybe add one thing to the coin, and it's just going to be the year that it was minted. So you can actually see what year, if you got it in the first year of mintage, second year, third year. Should be pretty cool.
Do you plan on backing it with hex or anything like that?
What's that?
Do you plan on like backing it with hex or anything?
The making of the coin?
Yeah, like how like was it like the Cautious coin or something was backed by Bitcoin or something?
Well, yeah, so you can put private keys engraved onto the back somehow. That's what Cautious coin did. That'd be cool if you could do that with hex though.
It would be cool. I don't think that's where we're going with. I think it's just going to be kind of like a keepsake kind of thing. That's all.
Yo, Brand, you want to come on the stream, dude?
Hexicans would eat that up.
Come on,
Brand. We need 6.
I'll send you the link right now, man.
We need 6 for the hexagon table.
Yes.
Yeah. I literally didn't know you were streaming, dude. My bad.
Oh, was he streaming?
He was going to stream with Gary and Big Pep.
Yeah, we were already overlapping. It just is what it is at this point. You can't help it.
Yeah, it's fucking impossible to do anything. Yeah, Brand the Builder. Yes, we can. There you go. There's a link, bro. Come on in. We need those guns in here.
That's right.
Hey, Dan, how's it going, man? We got Dan Emmons in the chat.
Dan Emmons, what's going on? Let's see who else is here. Hector the Protector. Know your worth. Yeah.
Is this off your channel, DC?
Yeah, this is on my channel. Yeah.
Okay.
Yo, you want to know something that's really crazy? Is that Periscope is going away next month?
Yeah.
On March 31st.
Really? Okay.
Yeah.
It didn't do so well, and it's gone.
Yeah.
That's
You know,
surprising. Okay.
I don't. Yeah, it's pretty trash for the most part, right? But here's one thing that it is good for is you. It shows you're live on Twitter, which is really nice.
Mhm. Yeah.
That's the only reason I use it. It's just because people can be like, "Oh yeah, it's still live right now. I'll jump in." Let's see. I wouldn't want to hang out with the GF last night.
Oh, nice. I like the thumbnail. Good choice.
Yeah, because we're in recovery mode right now for sure. This is the dip. Everyone bitches about the dip. Oh my god, I wish so much that I could buy Ethereum cheap again, and it's cheap again, and you're like,
They don't make the move.
Yeah, it's so true. Like most people, they just turtle when the opportunity comes. It's literally just like a turtle. And
Meanwhile, I'm pulling out a loan and shit.
Yeah.
Doing the exact opposite.
Yeah.
Full DJ
My
mode.
first loan ever, first loan I've ever taken.
Really?
Yeah.
That's awesome.
Crypto loan.
What kind of did you access that through like DeFi, or is that through like some kind of? Oh, you got it through the DeFi.
Yeah, it's a
Dude,
DeFi.
okay, cool.
1% APY. Like,
Yeah,
Oh,
It's
you can't
amazing.
beat that.
it's amazing.
that is amazing. I am gonna have to talk to you after, like when we're offline later.
Same.
Is that-
Got better rate than me.
Yeah.
I went
Yeah,
through
it's just-
traditional finance.
yeah,
Oh, you
because
did?
Yeah, that's what I used to.
Makes sense.
Pleb. Such a pleb.
You're paying more than 1% on the loan.
Mm. Sounds awful.
Yeah.
"Ooh, there we go." That's what I like to see right there. About
There you
25
go.
dump, son. That's nice.
That's no
There you
joke.
go.
That's no
Yeah.
joke.
Yep.
Mhm.
Serious money.
That must have been like what 25 racks at least.
Yeah, about
Yeah.
a little over 25 racks, give or take.
Nice.
That's a good entry too. I think. Not financial
think-
advice, but I'm pretty sure.
I
Mhm.
would say so.
Nice. See, I jumped on ETH, XLM, Link, Hex, Litecoin. Yeah, XLM actually, that's a surprising one too, because XLM now actually has more utility than XRP now, which is
It came
really
back.
yeah.
How did it affect? Do you know what happened?
Oh yeah, the Ukraine
Was
is
this
going
something
to
yesterday?
it's going to be the official cryptocurrency network for the Ukraine for its central bank currency.
What?
Yeah, Ukraine's using XLM. Yep.
That can't be true. That's
Yeah. It is. That's true.
I refuse to believe
Yeah,
it.
I just assumed it was some new like narrative that got spun around for like Stellar, or there's always like some
Yeah.
because because I feel like that's what, yeah, like I'm gonna
I'll
that's
find it right now. Look, Stellar. Look, XLM,
yeah.
XLM, Ukraine.
Article written by them.
They already got Senegal with the A-coin, so why not onboard another country?
oh yeah, Acoin. That's Akon's nation state, right?
Yeah,
Yeah.
That's where we're all gonna move. We should all just go move to Acoin world.
That's the next Wakanda.
Yeah, I can't believe like a
Senegal
country.
forever.
Say that again, Coffee.
I can't believe a country is adopting a digital currency as their reserve currency. Like,
Yeah.
I guess we always figured this would happen, but who would have thought it would come in XLM? Like, who would have thought it would
Yeah.
be?
Well, if you actually looked into XLM, it had deals with IBM, like almost like watch this right here. So right here, this whole thing. So Cointelegraph previously reported that Stellar recently won a battle of blockchain payment networks against Ripple amid the major settlement reversal. This shortly came after Stellar Development Foundation linked an agreement with the Ukrainian government on January 4th, 2021 to collaborate on a new digital asset ecosystem that including as a central bank digital currency. Bam.
So yeah, you reading that
Yeah.
or no, yeah, like my interpretation of like a lot of because the thing is these kinds of articles, this is I guess mostly for, I mean, you're just providing the information to like whoever's like coming in at the time, but like the one thing you want to be really careful of is these kinds of articles will always pop up like after you get like a huge pump on. I remember seeing this last cycle with Ripple, like you'd have a huge weekly green candle or like a huge candle come up, and then you'd have like you'd have news outlets start basically pumping out just basically like mostly it's mostly just like I think it's mostly just kind of embellished because like central bank digital currencies, like all of that stuff is entering the space, and it's like the dominant one is like it's always going to be like Ethereum in my opinion. I mean, I'm pretty Ethereum maxi, so perhaps like maybe I'm biased there, but there's other players like entering like I guess like the digital asset side with like these like government issued currencies or things like that. So because I guess like with Ethereum, since the block space has a lot of demands, it's not really going to make sense, I guess, like if they need something a little more efficient. I mean, granted, like not blockchains in general don't really like, you can't scale like on the main chain really in practice, but I mean, I don't know where I was going with that. I was just saying I see a lot of these. I see these articles come up a lot whenever there's like a stellar problem.
And they frame them weird, right? Too like they can frame it correctly where it's like, oh yeah, you know, they've adopted XLM where they might have just like messed around with it or tried out. Like that's what XRP did with the banks. Like they would like, oh yeah, this is what so and so bank is using now, and they might have just given them some XRP. And it's like, no, they used it. They dumped it on you guys. Like they totally used it.
Yeah.
Jay says using the network, not the token. Kind of like Ripple was like
okay.
The network token was just nothing, like no relationship at all.
Right.
Gotcha. Yeah, I'm not trying to like shit talk like whoever's holding like Stellar or anything like that. It's just more of a observation because if the whole market, like, I mean, truthfully, if the whole market lifts up, like it's just that's kind of the market cycles I guess Stellar just historically has. Like it has these really big. It just has these really big rallies that it does nothing for a very, very long time. Like it's one of the hardest like for people to speculate on. It's really hard to because most people get. I mean, that's just kind of I just more so look at the price charts, just see how it behaves.
Definitely. So I mean, pretty much what's going on with like Stellar Lumens is they don't really want people to use it. Like the whole thing with Stellar Lumens was it was just supposed to be something for governments to use.
Mm-hmm.
If governments are using it, that's all that matters, really. I mean, that's it. That's the whole thing with Stellar Lumens is like, and if you look at the Stellar Lumens, the guy who made Stellar Lumens was pretty much one of the guys who made Ripple, right? And if you I forgot his name, Jeb McCaleb. If you look at Jeb McCaleb, he's hella connected with the Democratic Party. Like stupidly, I was like, whoa. So if you think it's kind of weird, you think it was kind of weird that like not to throw some conspiracy shit out here, but like wasn't it kind of weird that like he sold $400 million last year in XRP, and then from there use that to funnel up XLM, and then XRP and Ripple are now under investigation, but XLM is like nothing.
We'll just shift over here.
Yeah. Hilarious.
Yeah. Odd timing.
Right. When airdrop? When Stellar airdrop?
What happened?
I don't think that. Didn't they airdrop some coin to Ripple holders or something?
Oh yeah,
like
Sparks token. Yeah, they're
just like a non-security version, or like what?
I'm not sure, but Spark token's now trying to airdrop shit to Litecoin users too now. I shit you not, dude.
Yeah, it's just a never-ending chain of airdrops.
Yeah, that's hella funny.
I mean, there's so many airdrops going. Like all these DeFi airdrops are about to be coming up in the next year for anyone that used any of these like DeFi protocols, which are probably super risky. But I know DYDX is going to be doing one for not for sure, but that's the one
it was in the same article as Uniswap, and then they also had the 1inch exchange, and then the third exchange they mentioned in that article was DYDX. So the other two have come true so far. So I'd be very surprised if DYDX does not. But you got to be careful, right? Because I believe that's a leveraged trading platform. So it requires a lot more. It requires you to agree a lot more things on your MetaMask wallet when you're interacting with it. So just be careful on what you're actually signing.
Yeah, you can actually do spot on it too.
Right.
So you don't have to do leverage.
Yeah. Right. You still have to sign a couple extra things though with that. Just using the platform.
Another bad thing about it is like you have to be using like multiple Ethereum on it. You can't just do like 0.2 Ethereum or something like that.
The minimum you can do is a single Ethereum. So if you have a single Ethereum, you can move it around on the spot price and you'll be okay. So that's what I did. I moved it through a couple of my wallets, single Ethereum through spot transactions, moved it out. And then I also, after I did spot from ETH to USDC, and then when I got USDC pulled out, I did a MetaMask swap just in case MetaMask ends up doing a airdrop as well for the future.
Yeah, I also did a DOIDX loan because they have a loan platform on there. And I didn't know if that was going to count for something else because you never know what the terms are going to be, right? So I did a loan for like maybe an hour, and then I just returned it right away.
How'd it work?
Totally fine, seamlessly. I didn't lose anything at all except for gas.
Interesting.
Yeah.
Cool.
Yeah, that sorry, I was just reading the chat right now.
It's
But I
kind of
wouldn't-
wild actually able to like do this stuff now, where like back in 2016, 17, like none of this was really a thing, not to this degree.
It's back then it was just all like it was just all talk back then.
Back then it was
literally.
just like how quickly could you pump out the token and fabricate some narrative to go with it. It's literally all it was.
I'm going to give you a little lesson that I'm gonna start telling people around Q3 of the crypto mindset course is don't buy a token that launches after this point. That like any token that launches after this course,
Hype cycle.
don't buy it at all. Just no, because there's not like you basically have to buy tokens that have a track record of work. So you know if they've done some work and they launch something, you know it's going to do really well. So there's something there at least fundamentally. But if you get into a token afterwards, you got to say to yourself, I'm fucking gambling. I'm gambling.
Yeah.
You got to tell yourself that like I'm gambling, but I'm okay with that. But you got to be okay.
This is the fruition. We're seeing it all these 1 or 2 years working on shit, actually building it. Now it's like a real thing. It's coming into reality. So
yeah,
I wouldn't
it's
trust anything that somebody just whipped up, in a month or whatever.
Right.
And that wave will come once we go in full kickoff into a full bull run. You'll see it. You'll see hundreds of new projects and coins that you've never heard of before, just trying to steal some of that hype cycle coming through.
Yeah, and it's like even with like the comment on there's that one I guess DC just pulled up with like synthetics, because I know synthetics is like they're one of the bigger ones on the DeFi side, and they've been in the space for a while. So you're basically gonna have junk pop up in the market where they're gonna be like, oh, we're like a better version of like this already leading like network effects, like we're gonna take it away basically. And those are total like,
yeah,
you have to be so careful with those because it's gonna happen like all the time. Like there's gonna be different buckets. Like for example, like you even saw it with like Hex. Like there was already a double rug pull off like one of the attempted competitors. There's all sorts of like stuff where it's people basically trying to leech money off what's already becoming successful and has like a network effect around it, and you don't want to be caught holding the bag over basically promises, because that's why I love the term, like I didn't think of this word, but like the Hex community where they call things like it's like basically promise coins that start to pop up that try to siphon money away from like communities that already have a presence in the market. So you can't, like, the thing is, for speculation, if you're trying to like flip shit coins, which they're just total shit coins, you can't, there are like moments where you can do it, but it's risky as fuck. Like it's so risky because you're still at risk of like bleeding out versus the dominant pairs. And then when you get these huge moves, like it's not stuff you can just safely hold. Like those are coins that are going to get, like, you're just going to have massive supply getting sold off, and just it'll totally kill the coin.
And the risk. Oh, sorry.
When you can edit a coin and it's not totally immutable, and you're not paying really close attention, ear to the ground with it, it's so risky because you never know when there's going to be some kind of update, and then temporary, even if it's not even if they say it's not a rug pull, it's like pull the liquidity. Oh, but we put it right back. But I didn't know, so I thought it was disappeared, and I got scared and I sold because I wasn't watching the news 24/7. Right.
The risk reward just doesn't make sense. Like everything's good until it's not, right? And that's the issues you run into with third parties, backdoors, stuff that's not complete. Everything can be hunky dory 1 minute, and next thing you know, everything's gone, and you literally have a pile of trash that's worth nothing. You've lost whatever your investment was. That's how dangerous it can be, especially as we come into this new cycle.
And another thing too, right? This is just another rule of thumb right here. So if you're like, let's just say you want to have a multiple coin portfolio, right? Get the cream of the crop of each sector you're going into, right? Like you get into Hex, you shouldn't get into any unwise tokens. You know what I mean?
I know what you mean.
Yeah, you know what I mean? Like you're buying the Hex, you already got the cream of the crop of the CD market. So it's like, why even fuck with anything else?
Don't lock your liquidity up in unwise projects. That's it.
That's it. Yeah, that's just it.
Yeah, just like a good example of this, I could actually show. I could pull up a chart, guys, to show you what basically happens to those that try to do a clone and a downgraded one at it. Like, it's not good. It's just this is what the market does to you. So I'm gonna pull up the chart for Bitcoin Cash versus Bitcoin, and we're gonna take a look at what that did over time and why it was just a terrible idea to bet against what has already presence in the market with a network effect. You're gonna have all sorts of like memes, narratives, or whatever on like Reddit, or it's basically just the people that. This is why, like, if you're on social media outlets like Reddit, it's so dangerous because literally you have people holding like bags of like total garbage that are just truthfully basically just hoping that they can dump like their useless coins on like some other person that just doesn't know anything in the market. And so all right, I have the chart up here. Let me flip to the share screen.
Sure. It's like imagine like you have Nexo and you have fucking crypto.com, or you got Celsius. I wonder who's gonna win. I mean, like, you know what I mean? It's like Bitcoin or Bitcoin Cash.
You got like Mike Tyson going up against a featherweight. Like it's not even fair comparison.
Right.
Yeah. And is it actually showing my screen?
Yes.
Yeah.
Okay, so this is Bitcoin Cash versus Bitcoin through its entirety. So when the fork first happens, there was a lot of speculative trading, but this is kind of movements you see like during bull markets where you have basically like one red candle up, and then you just have a lot of chop, and then after the bull market cycle ended, it's just death. It will never ever get out of this wedge ever again. This is what I call a death wedge that just keeps going down and down until death. And the thing is now, when coins first launched, the reason why they're even able to do these kinds of movements initially is because there's no moving averages basically on like higher time frames. So for example, this is a weekly chart of BCH the Bitcoin on weekly time frames. So there wasn't any like resistance at the time to kind of gauge off of, but after there's enough time in the market, you start to get these moving averages, and then you maybe get like a short squeeze up to these moving averages. People buy the top, and then they get wrecked. Like it just keeps going down into the death wedge. So that's why you don't want to. We're still early enough in this cycle that you truthfully shouldn't be betting on total. Like you shouldn't be betting on alts. Just to put it that way. The opportunities.
Like if you imagine. You see this chart now, and it seems like, oh yeah, duh, of course that was going to happen. But imagine you only had the first 2 or 3 months of this chart.
Yeah,
you might think things are going hunky dory, like everything's going
right,
pretty, right? Because it's a bull market, everything's going well. Oh, we just spiked up, 4 or 5x. Now we're down a couple x. Now we're up 2x, and then once it's over, it's like where Just try to think about it from that perspective of being in hype, not just being like, oh, because hindsight's 20/20 kind of thing.
And to speak to that, I remember to this day when that happened, like that green candle right there, when Bitcoin Cash was giving Bitcoin a run for its money. Like I remember, like everyone was freaking out. Like everyone was like, "Oh my god!" Like it could take Bitcoin. Like everyone was losing their mind. I remember to this day where I was when that candle was going on.
Yeah. And what's great? Oh, sorry. Go ahead.
I felt a little weird. I was getting on the L. I specifically remember, like, oh my god. BCH is 50% of BTC.
I was pulling into 7-Eleven. My phone was blowing up, and I was like looking at it. I was like, Jesus, like it might take Bitcoin. Like,
And the crazy part is like if you look at because after each of these, there's always like dip buyers in the market. So basically, you had dip buyers over here, and then wrecked. Like and it just keeps going down. Like that's the whole thing. Like these kind of movements they're not sustainable versus like the dominant pair. So that's why last market cycle was a really good. It was a good learning experience as to what that is going to look like again this cycle, because you are going to see that same behavior.
Yeah.
Oh my god, dude! I just read the most ouch thing ever of all time.
Or can you disclose it? You can. Sweet.
So Andre. I always have trouble saying his last name.
Yeah.
Congre, like the guy who made Wi-Fi, right?
Wait.
Andre. You know Andre.
DeFi guy.
Yeah, Andre. Yeah, so basically, it's the guy who made Wi-Fi. Well, he just look at this right here. He's like, he wanted to launch like Wi-Fi as a fair sort of thing, right? And he basically allowed everyone to basically buy the token up. So he had to buy his own tokens too in the beginning. And what ended up happening was, he's like, he just released this right here. Don't give away your tokens. This one is less general and more of a lesson learned by me specifically. When I decided to distribute all of Wi-Fi's tokens 100%, it's because I believed it will allow me to exit the community. However, I'm still blamed if the price goes down, and I'm still consistently plagued by when next update messages. I still have all the responsibility and the expectations, except zero of the reward or the upside. I don't do this. I was an idiot.
Damn.
Wait, who is this guy? Is this Anya?
Yeah. I'm not familiar with him either.
Yeah, he
other DeFi stuff.
I'm sorry.
Is he the guy that made all those different DeFi stuff? Like
he's the guy. Like he made Wi-Fi Yearn Finance, and essentially he was one of the guys who kind of really pioneered earning yield and yield farming.
You were saying YFI. I thought you were saying like Wi-Fi, like the guy that invented Wi-Fi. Like
I thought that at first too. I was like, what's that dude? What's that dude messing with crypto? He should be good.
Well, his token only has 30,000 tokens, and he only got a couple, and like, look how high the price is now. It's like basically 30,000 per Wi-Fi token.
Do those tokens actually move?
Yeah, here, let me show you.
Yeah, see the chart.
That was a weird token because I think it had such a low supply, so the value of one token is crazy high.
Was high.
But you can only buy like 0.01. It's like the opposite, the inverse of unit buy.
I told most of the guys in my course, and where the fuck was it?
Unit bias is a real thing, especially when we go into a bull run and you bring in mainstream people. It's good. It's human nature.
Motherfucker, god damn, son, getting rich.
Getting rich, bitch.
Getting rich, man. Don't even know it, man. Shoo. Okay, where's Wi-Fi? Oh fuck, it's lower than I thought. Here it is. $29,000 per token. So this is the sort of thing I was telling a lot of the guys in the course was, even though you could make some money on this thing, it's just not worth it, because what's going to happen is that your human psychology is going to make you get overexpose yourself to a token. So you're going to want to get closer to one token, right? So when it's really low down, well, let's just say this thing crack, because look at the chart right here, right? Let me go to the chart. At this point, like when was this? Around November. So let's just go in the last 3 months, right? So what was the price? The price is 27,000. It crashed over here 21. Now it's back up to 30. So what someone would have done at this point when they went to $21,000 in the last 3 months is someone would have definitely like, oh shit, it's $20,000. It was at 30,000. Fuck it, let's go. I'm gonna get a full coin. And without even thinking about it, let's just say that 20,000 was a huge part of his portfolio. Let's just say that was 60%. Like he had $60,000 total of money in terms of all in crypto, and he just threw 33% of his entire liquid net worth into Wi-Fi. And let's just say the price started going down from there. Could have totally got wrecked. You know what I mean? So some of these were like token. So it's sort of like it's the same thing with like tokens with the super low prices. Like you end up getting more like, oh fuck it, let me try to get 1 million of these small tokens because I want to have 1 million. So like, I would say it's even less. It's like a token with the super high price is even more dangerous than a token with a super low price.
Because people just try to get one. Is that what you're saying? People.
Yeah, they'll shoot them. They'll overextend themselves to get one on a dip. And then without knowing it, when they look at their portfolio, then
they're overexposed.
Overexposed, exactly. Yeah. So like it's supposed to be a 5% allocation to a token like this, and then they're like, "Fuck, I'm 20% of my portfolio now is Wi-Fi." If it works out, cool. But most of the times it doesn't work out at all. Like Wi-Fi is actually not a terrible project. It actually does a lot of work. It does a lot of work and stuff. But to tell you the truth, I wouldn't really mess with it. Really, I would do something else. Jesus. Hey, thank you.
Agreed.
Yeah. I can think of one other thing to do instead.
Yeah, me too.
That's been around.
All right, we switching off. Now we got wasabi.
All right. We'll start.
I was gonna pull up the price charts here.
we should
I-
have had DC take off this Wi-Fi stuff.
Oh, oh man. Aren't you like the mastermind? Or,
There we
yeah.
go.
I think let me try to do
I was handed a
share
steak.
screen here.
You're headed what? A steak?
A steak, yeah.
Nice.
Yeah.
What cut of meat?
Ribeye.
Good choice.
Yeah, my favorite.
Bone in?
Or
no?
Probably not. No, not bone in. This one. No.
Nice.
Are you guys
that's
able
cool.
to see my screen?
That's a good one. I like this project, whatever this is.
Okay, cool. All right, let's begin.
Let's talk.
Yeah. So, what I'll do is I'm gonna first flip to the Ethereum chart because it's gonna relate back to Hex.
Right.
So this is basically for short to midterm price movements in the entire market. And I'll use even though Bitcoin does have the most gravity, Ethereum and Bitcoin kind of revolve around each other at this point, where they kind of mirror a lot of their the moves together through the market cycle. So for Ethereum, basically what I'm looking at just for a rough indication, like what the rest of the market's going to do in the short term is since the COVID crash, so right over here on the chart, Ethereum has been following this nice trend line here so far. This trend line is still valid. It can very easily come back and retest it and still basically maintain that uptrend. So when you see a lot of these parabolic moves in the market, as you've seen with Ethereum, and that has in fact happened with Hex too. Like Hex had basically this huge move right around Christmas. It's pretty normal where you're gonna have a lot of volatility in the market because what everybody needs to consider is like throughout the bear market. And this information I'm saying here, I actually this is insight I got from watching Ben Cohen's content just with Bitcoin and Ethereum. Is you have people in these bear markets that are accumulating at these lower prices that end up like on the way up. They are going to take like profits off the table, and when those profits are in the two biggest pairs in the market, Bitcoin and Ethereum. It is basically gonna affect like the movement of the rest of the market because these are basically pointing as to where the market's gonna go, which has been definitely like up and to the right. It is a bull market, but we are gonna have really aggressive corrections on the way. I don't know if this is a local top. This could keep going up, but this is very parabolic. This is happening really fast. So Ethereum can keep going. It's just once you go into price discovery, it's indeterminate just how high it can go and when pullbacks are going to happen. So for Ethereum, I would not be surprised if it retested levels like $800. It could even go to lower levels. We don't know like what the price is going to do like during these pullbacks, but that's why you still have like the dollar cost average into coins. Like you can basically then accumulate Ethereum Hex at lower prices because often what's observed is the human psychology is, oh yeah, I'll buy that dip. It'll be no big deal when it happens. And then when it actually does happen, like 99% of the people are going to turtle away. Yep. And that's why only 1% of people in like markets and investing in general end up being successful. So it's you have to go against like the herd mentality. And if you can't do that, then truthfully, you're just not going to make a lot of money in these markets because you're going to be the one that's chasing instead of buying when the risk levels are getting lower. You don't want to be buying you don't want to buy coins basically into green candles, even though that's what most of the people do. You want to actually be cost averaging when you start to see red candles because the risk levels are basically getting slowly reset to a more reasonable level that sets up to the next stage in the market. So if we look at Hex, it had a very similar movement to Ethereum if you look at if you use after big payday, so after big payday, right here on the Hex chart, there was a really big move that happened relative to USD. So
Can I just thank you real quick, Wasabi, for using the full chart, unlike a certain Peter individual that I know that zoomed in right at Big Payday. I appreciate you using the full chart history.
oh yeah, no problem. Like that's the thing. Like if you're looking at the chart history for Hex, use Uniswap V1. V2 truncates the chart because the liquidity is now on V2. But if you want a macro picture, you have to use like the full price history.
V1.
You can't just conveniently truncate charts like to what you can't just do that. Like that's not how markets work. Like you want to analyze the full history. Was somebody doing it like maliciously, or was it
I don't know if it was maliciously or if it was out of his own ignorance. It's kind of hard to tell with that certain Peter individual.
okay, gotcha. Okay. So
we could probably pull up a cool video and show it later if we want to.
Yeah. Because if you use, let's say, like when you're using the full history for Hex, you can get a better gauge as to how aggressive the growth is over basically since the product first launched in December of 2019. So everything that's happening now in terms of the price movements are within the macro trend that it's at now. And this could, like in theory, like this could basically come back down and hit the trend line. It could even dip below and then come back up. These markets, especially at these levels here, you're going to have some huge volatility, and that's just how it is with cryptocurrency. You have basically 30 to 40% pullbacks in bull market cycles. So, for example, if Bitcoin pulls back 20%, Ethereum is going to pull back 30 to 40%, and then basically the majors basically like Hex is what I consider a major since it's in the top 10 at this point. You basically just get more volatility with the size of like the economic mass relative to like the Bitcoin or Ethereum. So that's just how and Bitcoin and Ethereum that's how they behaved as well when they were early on in their first or second cycles. The volatility is where people get shaken out because whenever somebody sees, let's say, a run up like this, there's always the mentality, oh, I'm going to buy the dip when it happens. Well, now you have the dip. Like this is where you start to think about basically dollar cost averaging your entries in. In fact, Motley and I we were actually going into we actually ended up spending a lot.
Probably a little bit more than what we initially planned on DCA. I know for me personally at least, but then we started talking back and forth. The next thing you know, we definitely put in more than we initially were going to put in that day.
Yeah.
That concept of like just not doing the opposite of what you're supposed to do, or like trying to dollar cost average but FOMOing in. And I mean, being in crypto for so long, like I've been in crypto for 6 years now, and I've just finally learned within the past maybe 2.5 years to, like I tweeted about this today, that you really need to do the opposite of what your brain is telling you to do. So you're experiencing fear, you're experiencing lack of abundance, right? So you want to get out. And what you need to do is realize that you're in a greater bull trend. So that's exactly when you do buy on red and you sell on green. I finally feel like I finally learned how to do this, and Hex helped me a lot too, because I've actually bought quite a few of these dips. But it's really hard. So I feel for like anybody that doesn't understand that yet. It does take time, but try to listen to that one point that Look Into Crypto mentioned, because that's probably the most important thing that we're going to say like this whole entire time.
And it's like you said, right? It's hard if you haven't been in for like 5 to 6 years at least, because you haven't experienced those cycles that we've been talking about. So you haven't really gone through it, and it's just human instinct, like that fear driven, or the FOMO kicks in. It's something you're not familiar with, and you really do have to go against what your initial kind of gut instincts are. And I think even Matty Allen has talked about this before, where you really have to almost force yourself, like, okay, the dip is in, like this is a buying point that I actually need to do. If it doesn't feel good when you're doing it, there's a good chance you're actually making the right play at that time.
If you're in for a longer term, and if you are the bull market. So there's some caveat. It's like,
of course,
go buy
only do it if it feels good. Only do it if it feels good.
Yeah. If you feel bad, do it. If you feel good, don't do it.
Yeah, and this is something like we've even been like after big payday, like this we actually were posting charts and stuff like shortly after big payday, so we were just analyzing like the movements since then, and basically just whoever bought at these levels, like it just goes to the whole like risk thing. Like we're within a really big consolidation that's going to be really volatile, and let's even go back to Ethereum again, because the consolidation on Ethereum during its first cycle was very aggressive. Like there was a lot of people that got shaken out. There was one final shakeout that Ethereum did that pretty much nuked. It completely nuked traders, and then it took off. So like if you look at Ethereum's first cycle, so this area here that was, or this region on the chart here that was consolidating for a while, and let's actually measure the length of time too, because what's also not really considered is the expansion phases of market cycles are much faster and shorter than the growth phase. So during the first cycle, Ethereum was actually consolidating for almost a year before it finally launched. So basically 1 year of consolidation, and then when it finally moved, and I'm going to measure it basically once it broke out of the consolidation, it did this move in a matter of basically just over 100 days. So we're talking 1 year of consolidation followed by a 3-month impulsive wave that led to new levels that never returned to this prior consolidation. So it's, in terms of the time it's going to take for like Hex or like Ethereum, or in this case, like
how similar does that look to the Hex chart, right? That initial little dip, like wait, but that's why they say like all. So that you'll hear this a lot in from technical analysts, but they'll say most of the gains of a coin are made in just a few days. And that's what that means. It means if you didn't have your position on one of those giant green candles and you didn't hold through, that's a very, very short span. But these moves happen quick, impulsive
and
ways.
you get left behind.
Yeah, absolutely. And just as Ethereum left behind people trying to like out trade the market, like you never want it. This is why there's always like recommendations by Richard not to trade, because the people that are basically trading over time, once you do have this big move, like that's where the big wealth transfer happens, and they're always basically chasing, like they're always chasing the market. They're never positioning themselves. And this last, like you have basically, there's always going to be shakeouts. Like there's always going to be the smart money that's accumulating. Like they have the opportunity, but the thing is, like that percentage of people is much smaller relative to most of the other people that get wrecked trying to outtime the market. Having the expectation of like trying to like outtime the market is not reasonable, because like as Crypto Coffee was mentioning, these moves are really fast, and if you don't already have a position set, you're going to be chasing the market, and you're not going to get the gains. And in fact, you're probably going to end up losing money during a bull market. So if we now flip back to the chart for Hex, like there's a lot of similarities as to what Ethereum did during its first cycle. In fact, if we look at the length of time for the consolidation, this has been going for, let's see, date range. So this has been going on for basically it's at 250 days during this consolidation range. So in fact, so far the length of time is shorter than what Ethereum took during its first cycle. So this is basically very normal behavior. There's a lot of similarities to ETH, and one day the price is gonna be multiple X's higher, and then you're gonna look back. It's always easy to look back on hindsight. The hard part is being able to take action when the market gives you the opportunity, because that's what's going to determine the success of your future self.
Yeah, it's reading the right side of the chart, right? So reading the last few candles. I mean, if you're going to do technical analysis, candlesticks are pretty telling, and also just recent trends and longer term trends kind of combined on top of each other. I mean, I do. So.
Okay, I'm back from the steak.
Hey, you know what?
Fuck yeah, it was good. It was delicious.
Yeah,
No bone.
How appropriate we're talking about Hex. No bone in you?
No bone in. I got some Wagyu in the freezer.
Ooh. Fancy, man. So you're just killing it out there right now. So now you've upgraded to Wagyu?
Yeah, I mean,
That's-
your boy,
yeah.
your boy out here just calling nothing but winners for fucking 2 years.
Treat
Yeah.
yourself.
For you, man.
Yeah. Oh my
yeah,
god.
no-
Dollar cost crypto, I want to know why there was this sell-off. Didn't like I feel like there's always insiders, and they're especially in crypto, and even at the top. You guys think Bitcoin is not manipulated, Ethereum's not manipulated.
Woo.
It's manipulation is just a word that means big whales are making moves in their favor. Right? They're
Yeah.
splashing around. So I wanted to ask our inside man, conspiracy theorist extraordinaire, Dollar Cost Crypto. Wasn't there like some of the Mount Gox trustee people got some Bitcoin unlocked in like the past 12 days? Was that-
Didn't know that.
I don't think it was that, but I mean, I have to look into. I haven't heard anything about the Mount Gox trustee, but if they started selling, we would have saw that everywhere. People, they would have blamed it on them the whole time, because like they can only sell, right? I mean, they can't even give the Bitcoin people.
yeah,
And
I just
more than
heard
likely-
something about that.
Yeah, I mean, in terms of coins that could literally go to zero, like I think this is the last bull market that Bitcoin Cash is going to be around. It's going to die in the next bear market. You have too many big entities that hold a lot of that coin, and Bitcoin Cash is going to die. Probably the what's the other bullshit one? SV, yeah, SV.
MBSV, yeah.
Is going to die as well. I mean, you have entities like Grayscale, right? Grayscale hasn't added anything at all. No one's buying it at all. So
Well, actually, Grayscale just opened up for investors again. They had a pause because hedge funds do that sometimes, but they just opened back up for business. So
Okay.
well, I mean, we'll have to see. I mean, have you noticed the numbers going up on Bitcoin Cash yet?
No.
Bitcoin Cash, no.
Yeah, I think because towards the end of the year, I noticed that the website, they had that like closure or whatever. I'm not sure how the rules work for that, but I think you were mentioning for BCH specifically. Like, I think you were suggesting the demand for, because they offer Bitcoin Cash as a product, but if you look at like the data over the last like year or so, there's much lower demands. Like there's less money flowing into like Bitcoin Cash versus like basically the other products that they offer. So even after it like opens, like I think what's going to happen is that there's not going to be much of a demand for stuff like BCH. Just the whole problem. Like I never really understood this until I think Richard Hart is the one that actually explained it, where it made sense to me. Is like, since BCH was airdropped, it's basically like it's every time there's like an airdrop, it's so awful for the price. Like basically you have people dumping it for Bitcoin, you have a bunch of people getting free coins. Like it is, and that's why you see it forever in that death wedge. Like that's why like once you diverge away from the originals, like you're taking on just like multiples. It's insane how much more risk. Like I don't know, I can't like determine mathematically like how much more risk it is, but it's exponentially higher. Like it's not a good idea to bet against originals. And then that's why like even back to the, you look at the price chart for Hex, like there's a reason why it's basically it's consolidating where it's at now. Like it had a really good 2020, and it's gonna basically keep ascending in the market, whereas like anything where you have clones and copycats are just not gonna. You might have like a temporary pump, but like they're over time, like they're gonna bleed out versus the dominant pair. So that is something I like. It's gonna take time to get the data, but and it's something I'm not really pushing now, because like I don't necessarily want to promote like clones and stuff that are going to get people wrecked. But after enough time, let's say 2 to 3 years, I am going to go back and plot just relative performance of basically dominance versus clones, and you're going to see the same thing play out with Hex, basically, where it's the dominant pair and everything's going to bleed out relative to that dominant pair over time. But for now, like because there's going to be speculators coming in, so I'm going to avoid really talking about like the name specifically, just because it's like a possibility that they buy total garbage that gets them wrecked in a bull market cycle when they should be making money and just being smarter about where they place that capital.
Right.
Yeah, but going back to the topic of a coin dying, though, that's an interesting topic. I don't think many coins ever truly die. I can only name like one, which is Mastercoin, that truly went away and you can't buy it anymore. But I guess if you still had the EXE for the wallet, you could still trade it to somebody for something, right? So then, Beanie Babies and Pokemon cards have them still. So you might see these things trickle down for a long time, and then they get to a point where they're at minus 99, 95%. Then all of a sudden it looks like there's a 3x pump, right? But they don't zoom out. So that's kind of like what happened to Doge as well. But actually, hats off to anybody that timed the Doge pump. But it's just funny things happen like that because nothing ever truly dies, and so Doge is just kind of like trickling along, and then all of a sudden it rockets up because I don't know, Elon Musk bought a fucking dog or something like that, and like now everyone thinks it's the future, and but it's weird. It's I don't think a lot of coins ever truly die. Right.
Yeah, I think they end up bleeding out. Whatever the thing is, I guess, since like if you measure it versus like USD, I haven't looked at what the charts do like versus USD over time. I guess all it really like matters is like how they perform versus like the dominant pair. Because you're right, like Bitcoin Cash people will still be trading it or whatever. There's still going to be like speculative trading going on, but it's like it's value in relation to like the in relation to it loses relevance. Yeah.
Just playing a losing game at that point.
They want to hear about Cell Moon math. Black Magic wants to hear. He wants you to talk dirty to him.
Sweet whisper sweet nothings into his ears.
120 end of year.
That's funny.
Yeah, you guys with ASMR mics and just talk about prices and like scratch the mic and shit.
Yeah,
Hex to $1.
More.
Yeah,
$2. With 40% APY.
Yeah. Well, that's pretty because it's you're basically getting because if you look at the like when you actually even back to the APY. You're basically getting like free dollar cost averaging like indefinitely. Like it's amazing because if this is one thing I was comparing to, if you look at let's say you look at Ethereum versus like other staking coins, right? So you have like Ethereum, you have like Cardano, Tezos, or whatever, but the APYs on both like the other staking contract platforms they're around like I don't know like 3 or 4%. And then if you look at basically that 3-4% versus like relative performance, like it doesn't like add up. Like you don't really get much of a it's more of like something that's kind of added onto there to try to get people to buy in, but it's not after like the APY with Hex, like it's just everything everything else it just doesn't compare basically in terms of like the reward you get. Like it's just I don't know. I've been spoiled. So
this is kind of what I wanted to speak on too, because I think DC's mentioned this point before. Because like as you get closer to the actual bank and the money, that's like where the power and wealth is, and that's what Hex enables you to do. Like the interest that mints out, if you're part of the staker class, that goes to you. And it helps kind of break those financial chains that a lot of us face right now, just with USD printing, punching a clock 9 to 5. Like you're losing out to inflation. So like we're some of the farthest away from big players, from banks and stuff like that. Hex gives you the tools to actually essentially become the own bank, print your own money, claim the inflation, and forever growing your wealth, as opposed to just being devalued over time and just becoming a slave to just overprinting and inflation.
Yeah. It's
Hey, what's going on, dude?
Hey, what's up, Dollar Cost? Good to see you, my friend.
Hey, what's going on, dude? I had to take everyone off, so I mean you could talk one-on-one just like RG does, man.
Right? No, I need the need to have the tank top on, actually,
Oh yeah, dude. So what you been up to, dude?
Not much, dude. Not much. The normal stream, the normal weekly stream on Sunday is something I'm still doing, and then kind of between like the conference itself, I had some one-off live streams that were kind of just randomly timed, but kind of just still following all the hexagons, and I think a lot of us have come to the consensus that there is a shit ton of content that sometimes is kind of hard to keep up with. It's like a full-time job within itself.
It's starting to get the schedule's starting to get a little bit tight to try to stream on right now. Like it's damn.
It's not even tight. It's just overlapping at this point.
Yeah, it's really hard. That's a good thing though. Yeah, that's a good problem to have, because if you have basically people overlapping with streams, like it just shows how big the community is. So I would take that as like a net positive instead of like basically I know it's like hard scheduling, like everybody has their day-to-day schedule and that's just kind of the reality of the situation. But if you see streams overlapping like there, it's like that's something you just don't really see like in terms of the community presence.
So
Incredible.
Discord syndicate. Oh, sorry.
You go.
So Discord Syndicate just started doing Tuesday, Thursday shows. Kinetics is running it, and they're doing it in the morning so we can reach the European audience, because right now we're doing this late, right? So most of them are asleep. And it was cool. Like this morning, he ran it a little bit earlier, so I was actually able to hop on because it was before work. And so like I was literally on a stream with someone from Poland, from the UK, from Germany, like all over Europe, and they had their own stream going, their own time, and it's getting to the point where it's 24/7. And it was kind of funny too, actually, because me and El Hexadente had been introducing the guy that I was telling you guys earlier about with the hex lamps and coins. He hadn't looked into hex yet, and so we're El Hexadente was onboarding him, and he kind of, like, as we talk about collabing on the coin, he was telling me, it's like, yo, like I don't see any other community like yours, like in the space right now. He's like, I've never had my products bought up so quickly. I've never had it promoted so well. He's just like, everything's just like went off the shelf in like seconds. And I was like, it's going to be the same thing when you do the coin. Like if you do the coin right, it'll be the same way. And like, initially it was funny because he stamps his company name on the coin, to promote it as he distributes it. I was like, you don't even need to do that. The Hex community I guarantee you, they will tag you, they will promote your business. If you give them a good product, they will go to the ends of the earth to shout your name. And we've done it throughout this year. Between Uniswap, we've made popular, through Nomics, we've made popular, over the whole gatekeeping with CoinMarketCap and CoinGecko. And it just shows you the power of community. And it's really that X factor that doesn't necessarily get mentioned all the time when you're talking about these coins.
Those ramps are awesome, but I also want to say it's quality and quantity simultaneously.
Right.
Not a single other community that I know, even if they do live streams, they don't talk as eloquently as we do. They don't speak as intelligently. They can't chain a bunch of sentences together in a cohesive thought half the time. I mean, it's a beautiful thing. And where was I going with this? The fact
You were off to a good start.
Thanks. The fact that we always have overlapping streams lets somebody constantly be hearing about Hex for an entire day, week, month, because they have to catch up to it, right? People don't only have 24 hours in a day, and when they're not listening to a stream, and I hope to, as a side tangent, I really hope everyone's SEOing their shit properly, because if you're not tagging Hex crypto or how to buy Hex, where to buy Hex, or whatever else you might be interested, underwater basket weaving, I don't know what Brand's into, but it's probably interesting. And
He nailed it a second ago. Underwater basket weaving.
Yeah. So cross pollinate, because that's how you do outbound messaging. But that outbound messaging kind of sucks people into this vortex of never-ending Hex streams that is constantly going, and you'll never catch up no matter how bad you want to. Because Richard Hart's videos alone are thousands of hours of free content. Our videos that we're doing now, we just did an hour, and we're just going to keep cranking through. But I think that's the power of not only does it hook you in with the the mad gains and the cool tech and all that, but you stay for the community too, because there's always somebody to talk to. There's always some shit to talk in a chat somewhere, and you could always do whatever you want. There's somebody for you no matter what you're into.
Yeah, and like if you look at because oftentimes what you see with like live streaming and just trying to like even just promote channels like through social media outlets, you get, and I'll kind of describe how it relates to the Hex community. Like you get, most people tend to like fight over like things like streaming, blah blah blah. Like the Hex community just works together, and just like everybody's basically promoting each other, because like that's ultimately what's going to increase like the value of Hex over time. Like more and more people are going to be aware of it. There's tons of free knowledge out there. Like the stuff that comes on these streams is worth, like, I'm not even kidding, like it's free content that's worth money, but the community is giving it out for free because they know it benefits the product, and it basically keeps having a growing network effect where everybody's supporting each other, and you're just going to get word of mouth out there much, much faster as a result. Like, even if you look at the it's just incredible, because this is really the first time like I've ever seen like so much like everybody just helping each other out, just getting word of mouth out there. And that's really the part that's important, is that is going to have a much bigger impact on where things go, 5 to 10 years from now, versus more of like a cutthroat type of environment where people are trying to like step over each other, things like that. And that's why this community and this product is going to be successful over very long periods of time, because we're starting to even see like success stories even over like the first year of existence. You're seeing certain brackets within the community hitting millionaire levels, and that's like over time just keep adding zeros to like the balance. Like that's what's going to happen over time. So you're going to see that effect basically trickle down the ladder, and you're going to see more and more of these success stories popping up. And the thing is, these stories are going to be like, the community is basically going to do a really good job like getting the word out there and just seeing how amazing like this community is. So I mean, this is even cool. Like all of us like on the stream right now, like where do you see this kind of stuff happening? Like, let's be realistic here. Like I don't really look
outside the community a whole lot, so
yeah.
But I don't think it's happening anywhere else.
And that's why I mentioned like the guy that didn't have any involvement in the Hex community, and like in just a short time he like became aware of it, and it's just like, yeah, I haven't seen anything like you guys in the space right now. Like,
that's good to get that validation. And I do want to stress too that you don't have to only talk about Hex. So it's like we like Hex a lot, but we talk about a lot of other stuff too, right? So we talk about whatever's interesting, especially in crypto, because that's what I know, it's what I love. But Dollar Cost likes that too. But I mean, I'll talk about whatever weird hobbies like anybody's into. It doesn't matter.
Most weird hobbies.
Yeah,
might have to draw the line at some point.
No, we do have hexagons everywhere. Even like Richie Rich Crypto. I saw him kind of doing some like cooking videos and whatnot, and kind of just venturing out. And it's something like Gary told me this a lot. Funding Jim or Gifting You Hex told me this a lot. But he's like, he pretty much said the same thing. Like, yeah, you don't only have to just stream about Hex content. Like, if you can find something that you're good at outside of it, or something that you're passionate about, the cross promotion really goes a long ways.
Yeah.
Just Pornhub music.
Black Magic is something to sell over here. He wants price predictions. He wants moon math.
Oh my god. I actually
$50.
Yeah.
Anyway.
All right. Let me see. I just saw a really good
it's like building up the pressure.
You could go ahead.
I just sent you the keywords.
SEO. Yeah, I saw that. Thank you. You can go ahead and pull that chart up too that I sent you, DC. That shows you a rough estimate on your multiples of X on principal on staking.
Or do you send it?
I sent it to Telegram. It was a model some of the guys in Hex Pro Chat made.
Yeah.
Now Hex is a dynamic system, so you guys kind of take this with a grain of salt. I believe when they did this, they did it as the system as static. So, but this kind of gives you an idea of what you can multiply your principal on over the time periods depending on your stake length. And also, fun fact, I put a tweet out today, but I was seeing what the minimum amount of Hex you need for one T-share. It's currently 5,555 Hex for one T-share. If you stake it out to the maximum of 10 to 15 years. So I thought that was pretty cool.
I saw that, dude. That's awesome, man.
Yeah.
And I even heard Dollar Cost mentioning one time that like when he was talking about laddering and just staking Hex, but a lot of people don't really consider how powerful that is. Yeah, 3 times the shares or 20% more shares every year longer that you stake. That's a big deal when you're talking about like long-term ladders and earning 3 times the T-shares. That's nice.
Yep. So 20% per year out to 10 years. After that, the 10 to 15 year mark, which you'll hear a lot of hexagons saying Quattro Cinco. At that point, you don't get any more bonus shares, but we can talk about the advantages of locking in that that T share price.
You want to show your
the
copy?
point.
To show it's
Oh,
not on my side.
were you not able to blow it up?
No, I was doing it through Twitter.
Let's see if I can make sure not to dox myself.
Dox yourself.
Don't.
Dox yourself.
Let's see.
Definitely. Let's see the.
Okay.
Oh my God! I almost pushed the end broadcast button by accident.
Oh, glad you did do that. All right. I think it should be going now. Can you see it?
Yeah, I can see it. Let me.
Yeah, it looks good.
Okay. All right. So this is a model. Some guys in the Hex Pro chat, they're a lot better with mathematics than myself. They had to kind of reevaluate what our multiples of X were going to be on the principal after Big Payday, because a lot of the models that were ran, they weren't run to essentially, I believe we had about 98% completely staked on Big Payday. So most of the models were not actually accounted for that. So that's how you probably, if you go back and look at old Hexagon content, people were saying 250X at 15 years and 80X at 10 years. And everyone's like, that's just like absolute madness. But that's what it would have been if we continued on with how much percentage staked we had at the time. But then we got close to 100%. So this is kind of a renewed model for everyone. Again, Hex is dynamic. So don't, this will change. It'll depend on emergency end stakes and moving through time. But this is a rough idea of kind of new numbers. So you can see as you're building your stake ladder, what kind of returns you can look strictly on your principal. So right now the average is just shy of 5 years, I believe. I think we're looking at like 4.8, 4.9. And as more and more shares come out of the system, the average is going to be start moving to the right. So we're going to be looking at about a 5-year average. So you definitely want to make sure you're kind of hitting that point, if not a little bit beyond it, because that's where you're going to see that maximum APY. So you're going to be getting like on average right now about 40%. So if you look right here, like 2025, that's where the average is at. And we're looking close to about a 5X on your principal, roughly. Again, take this with a grain of salt, but you're looking on average as a 5X on your principal.
Whoa.
What's that? What'd you say?
You hear that?
There's two of you.
Oh, I think it's screen. Yeah.
I don't know what's going on. I can't see anything.
Is that God damn it.
Are you in my room? Are you right behind me?
Well, anyway, 5X.
Yeah. So 5X around 5 years on average. Again,
Without big payday. Without big payday. Correct.
Let's see. I don't know if they actually include this into Big Payday or not. Multiplier estimate for stakes starting in 2019, 2020. I believe they designed this after Big Payday. So I think this is without Big Payday. Yeah, it had to have been because they redid it after the fact. So this is not Big Payday included. What's that?
Our charts better.
Yeah, our charts are gonna be elevated because we got about 30% bonus on everything via Big Payday. So if you were in before Big Payday and you have what RG3 kind of claimed as Genesis shares, you're gonna add at least 30% to these numbers. And then once you start hitting the 10-year mark, this is the last year that you're gonna get bonus T shares. So you get 20% bonus T shares up to this point right here at the 10-year mark, 2030. So you can see here, you're looking about a 20X just on your principal alone, just on your principal. And then this is the kind of effect that I just want to talk about. Now you don't get any more bonus shares, but as time goes on, you can see we absolutely start seeing crazy returns on your principal at the 15-year mark, almost a little bit above 90X. And that's strictly because as time goes on, a beautiful thing about Hex that's completely unique is share price is always going up. Share price, you can never buy back in the next day after your stake ends for a better share price than you had the day before. And so as time goes on, it's going to require more and more economic mass to buy the same position that you did previously. And so as you lock in these long-term stakes now, these 5, 10, 15-year stakes, as everyone else's shares come out of the system and they're burned, you're effectively having a pie that shrinks around your slice. So that pie of T shares is actually getting smaller. It becomes deflationary, and your slice remains locked in at whatever T share price you bought back in the day, maybe pre-Big Payday or even within the first year or two of launch. You're going to have a much larger slice of that pie for a lot less economic mass than what people are having to pay 2, 3, 5, 10, 15 years down the road. And then that's going to effectively give you crazy ROI on your interest. You're going to be accumulating. I believe my 15-year stakes right now are getting like almost 60% APY right now. Like it's madness. It's madness. So this just shows you kind of the effects and stuff that you can do. So even if you're, say, someone who doesn't have a lot of money to move in, you can leverage your time with Hex. And that's the beautiful thing about it. Someone who might have a small stack today, you might only be a tinkering turtle, or maybe you're at the bottom end of a squid. But if you do a staking ladder properly, or you leverage your time, you can become the new dolphin, shark, maybe a whale someday, depending where you are in the system.
Let me
Yeah, I think I just stopped sharing.
Yeah. So I just had a consultation with somebody where they've got enough coins right now in the market that their complete staking strategy is just they're staking from year 5 years from now to 15. They skipped the first 5 years completely.
Yep.
Yeah,
That's very smart. If you can hold through that, that's very smart, because that's actually what I'm doing right now. Is I'm constructing my second staking ladder where I'm only doing 5 to 15. So I'm filling it in and fattening it up, because that's where you're really going to see some serious gains, is at the 5-year mark. And then after that, it's off to the races. So like I'm not even touching the first 5 years before.
You can wait, which I didn't want to. I wanted 1, 2, 3, 4, and 5. But you're going to wait out probably the entire next boom and bust cycle of crypto. So you don't have to really worry about, timing any kind of bull market.
Right.
Mm.
Like 5 years will probably be at the low of the next cycle.
Yeah.
Probably.
That's true, because that's kind of what I was like at least planning ahead for was, I was just gonna assume, like, if you're staking, let's say, I could be way off on this, but just for speculation purposes, like it's totally spot on that there's going to be boom and bust cycles where the market over time, like you have these huge like impulsive waves like during the bull markets, and then you get these 80 to 95% retracements during the bear markets. But over time, like the higher your average stake length is, you're basically positioning yourself for what could possibly be like the early stages of like the next cycle and so on. So I have a similar strategy that whatever stakes I'm building out in my ladder now are actually going into, they're actually going, let's say, between years 10 through 15 for the most part. And I'm trying to basically build up that ladder over time. It's going to take me, the thing is, like, the ladders are something you can keep building up over time. And this is literally going to take me, even though I have like a certain minimum of t-shirts that I've like acquired at this point, I still want to now work on, my next goal is basically filling in certain gaps in the ladder. And
can we go to Hex.vision while he's going over this? It'll be perfect. If you want to do share screen and do that, I think it'll be good.
Sure. Yeah, because there's a huge opportunity on the stake. Because what's really important is, now that we have a lot of content we can access to build out our staking ladders. So I'm gonna flip to Hex.vision.
All community built, mind you. This is all people that are just incredibly talented.
Yeah, we were such noobs in the beginning. Oh my god!
I know.
Bro,
I know.
terrible.
It's disgusting how quickly, like, when I onboard people and they just get it, I'm like, this crap took me half a year. Yeah.
Giving away months worth of information in the matter of like less than 10 hours, maybe.
Yeah, in a couple hours, you can literally divulge what's taken all of us over a half a year to learn.
Now,
Thinking about the staking chart right here, though.
What's that?
On the staking chart, I was thinking like how there's a big, buy or potential sell pressure wall coming up, but then I sort of think there's going to be some segment of the population that doesn't understand the long-term thing, and they're always going to be staking, let's say, this giant bag of Hex for 1 week from now, and then cash out the interest and restake 1 week from now, because they're looking at it like a perpetual income machine, but only on the weekly or monthly scale. So I feel like there's always going to be this giant wave of that we're kind of pushing into, but it's not as bad as it might seem, because a lot of those people are doing this short-term perpetual rather than long-term perpetual. Like what we're talking about is a long-term perpetual cycle. Yeah. A lot of people probably just have 80 million and they're going to try to take 1 million every 2 weeks or something.
Yeah.
Real quick before you take off, can you zoom in on the largest candle there coming up soon?
Yeah.
So Silver has talked about this, and he's following this wallet. I believe the largest candle, that is actually a majority. That's essentially one wallet that has about 1.8 billion stake. What's that number on there?
Really
1.4?
close, 1.4.
Yeah, something
the
like
Ides
that.
of March, on the
What's
Ides of
that?
literally has it staked on the Ides of March. Like, what the
Yep. And so this is kind of the big move, right? Like, so we have a lot coming out over the next this, but you can see very quickly after that large stake, it just trails off to just nothing. There's no supply. So a lot of people are kind of because that one wallet actually is a majority shareholder. According, this is going all off Silver's info. It's a majority shareholder in Hex. I believe he has like 700,000 something T shares, something like insane. And so it's kind of, people are making plays and adjusting right now, whether or not they're not sure if this person's going to sell, if they're going to restake, what have you. If I had to place my guess out there, someone who is the largest shareholder in something like this, something that's this revolutionary, they're probably going to continue to try to maintain their position. So we might see a fake out. We might see some sell pressure before this, and then there's going to be some very volatile, very potentially rocket ship inducing moves that take place around that time frame. So you definitely want to keep your eyes on it.
Do you see that second biggest candle?
Right
Which
before.
one?
The
This one here?
That one,
Yep.
that's me.
That's me.
Man, I fucking
Okay,
wish.
I just wanted to touch on that real quick. Wasabi.
Well, I
Yeah.
think it's interesting. Like, we're all kind of hoping that it is somebody with a lot of skin in the game that's doing a restaking strategy, but you got to be ready for anything. So we're not going to bullshit you as if we know who that is. I have no idea who
Yeah.
that is. I would love to believe it's the origin address, because who else would have a casual bill to stake? I don't really know.
Yeah,
But if somebody really bought up $1 billion and staked it until March 15th, that seems a little weird to me. So I'm kind of siding with Motley on this one. I don't think it's going to be devastation, but we don't know for sure.
Watch
There's
it.
so much-
Yeah.
Watch it let
so
itself out or something.
Yeah, the game theory that I would probably go with, again, it's not financial advice or this. I think it's just it's kind of like a punk fake out. Like, this dude clearly has some serious money. I believe he's got a very large amount of ETH in his wallet too, and staking it here at this point, it gives him a chance to kind of reevaluate. And you're going to have people that are going to probably sell down into him, trying to front run him, and then guess what? He gets to just absolutely regain a crazy amount of his position, buy up cheap X, and like, it's off to the races for him. Like, he'll be set. He'll be set. So I think we're gonna see a little bit of a fake out move with him.
That's the way that
Yeah.
I see it. Like, it's going to be a win-win either way. You know, so many of these. It's so funny. Hex is a time deposit where we're locking up for at most 15.2 years, 5,555 days, and then people that are, you know, clearly like short-term time horizons or traders are like, they're so short minded when it comes to like a 1 year. Like here's the thing that I look at it is, either way, when they do that unstake, it's going to, at least the T-share price never goes down. So that'll maybe, you know, go up just a smidge. And then the other thing is, even if the worst case scenario happens and that person, say they sell a lot of it, well, then that just means that we can scoop up their bags cheaper. You know, that's the way that I'm looking at it, is like definitely an accumulation game. And I think when Coffee or someone else that mentioned that, or maybe it was dollar cost, but that the people that they know, they just skip the first 5 years. Like, you know, I keep the long-term perspective.
Yeah, and what's really interesting is with the staking ladders, because if it kind of goes back to like when the product first launched, and I'm sure there was a lot of people that were just getting familiar with like staking ladders, and just even just the game theory, because it takes time to fully comprehend the potential. It's a lot easier now because there's more knowledge of how to build out ladders, how the game theory works. So there's more tools and information available for people coming in now versus back when the product first launched. So if you look at when the stakes are expiring, generally, whenever somebody's setting up their staking ladders, you don't want to overlap with other people that have stakes expiring at the same time. And I think it's also just, you have this scenario because like where you have basically these huge spikes because like there wasn't really that consideration, because really, let's say they want to be more stealthy about this huge stake, right? And let's just say for this discussion, let's just say it's basically just the stake that's expiring, and let's say in the future they want to be more stealthy about it. Well, instead of having this huge bar on hex.vision, they could actually reduce the size of this and set up multiple stakes and then ladder it out over this entire time frame, filling up gaps that actually make sense, where that way, like when you have, let's say, stakes coming out, you're not basically drawing like too much attention. Because I mean, and somebody may say, oh, like, is that like good or bad, blah blah blah. Like in terms of staking, like for example, if you look at, let's say, year 2030, this I think was the first 10-year mark in terms of getting the highest amount of T shares. So at the time, since nobody was really planning as to like having their stakes coming out at the same time, you have a lot of overlap. Whereas now, since this information is it's more known amongst the community, there's now there's kind of a greater incentive to kind of strategize so that you're basically positioning yourself where you don't have these huge spikes on the ladder. And I'm sure like what you're going to see over time is, as you see stakes expiring, they're also going to use this information to set up their future stakes. Right. And I wouldn't be surprised to see like you're going to start to see some of these gaps getting filled up, and kind of more of a uniform distribution like on the ladder, instead of having these spikes come out. But really in the short term, the biggest stake we have is the one on March 15th. And then it really starts to taper down substantially after that. And really, like, it's pretty amazing, because now when their stakes are expired, they're going to be using this information and kind of planning ahead accordingly. Because maybe they weren't aware that their stake was going to draw this much attention that we're now talking about it on live stream. Maybe they're going to take their stake and like try to like break it up into chunks and then just kind of distribute it over a longer time frame. But it really depends on like what their goal is within the system. Like they can, if they want to, let's say, have maintain like dominance relative to their T shares, they're going to have to basically keep playing the game versus other whales in the system, and kind of leapfrogging that out over time to maintain the T shares. Because that's the other thing that's really important, is like your average stake length. And ideally, if to get ahead, you want to be above what the average is, so that you have a chance to ascend within the ranks, as opposed to kind of fighting with other people as far as like being able to increase in rank over time. So where I'm starting to basically fill in stakes is between the years 2031 up through 2034. And then if I start to see this get a little bit congested over the next couple of years, I'm basically just going to keep looking further ahead to the right, and that's the idea. You just keep looking further ahead, and then that's really the way to kind of preserve your wealth over time.
I think what's cool is you're going to also start to see that 15-year mark continue to build up, because when Hex is not at a point that hexagons find profitable, or they're just not interested in selling at that point. I found in the activity, a lot of those stakes that have been built up at this point are just people rolling over. A stake comes out, hey, I'm not interested, maximize my T shares, because you can still grow your T shares from previous stakes that you've done earlier, and maybe you're not happy with it. You already have a ladder in place, so you're able to just continue to roll over to the 15-year mark. And what's going to be beautiful someday is when we actually do, if you reach it to fruition of these 15-year stakes, and you've continued to add on, like, so for me right now, I'm adding on monthly at the end of my 15 years. When I get to my 15-year point, I will be having stakes that will have me potentially somewhere between 80 and 100x at the end, just on my principal alone. And I'm going to be getting that on a monthly basis. Like, that's going to be mind-boggling.
Yeah, and the part. Oh, sorry, go ahead.
When Richard calls this a chart of future market supply, I don't think a lot of people really, myself included, realize like how cool that is. Like, this is all of the future market supply that can ever come out. Like, there's no other supply coming from anywhere. It's all visible on this chart. There's no dark pools or anything like that. It's all on the chain right here. So all you have to worry about is pretty much this chart when you're planning your stakes, is the chart of future market supply. Because I mean, yeah, more hex is created from inflation, but all that inflation is only paid to the stakers, right? So it's not just coming out liquid on the market. It's coming out in these locked up little chunks over time.
Yeah, realized over 15 years.
Yeah.
Depending on what level you want to think about it, it's pretty crazy.
Yeah, absolutely.
Shout out to that one dude trying to front run everyone in the 555 stakes. That guy right there.
This one right here.
This
one
one
guy.
home, he's like,
How much is it? What do we got?
This one here is this is 37 million hex expiring, but also like this
That's still
when they-
nothing too.
Yeah.
Which is kind of funny.
no,
Yeah,
but
this is just
like he's like the one dude that is like there's people doing the 555s out there,
Yeah.
right? And then a couple smart people did like some 13s, and then or some 14s, and this Chad over here just like, no, I'm gonna front run everybody else.
yeah. I mean, this is honestly a very great like. There's a lot of places you can basically because what's really nice is like if you're actually building out a ladder in this range now, you're actually maximizing in terms of the T shares since it meets like 10 years or more. And there's always this like kind of psychology where somebody sees like a huge stake coming out and it's like, well, like, are they going to sell their entire bag? Which like, nope, like every, like I would say rational, investors or just rational, just whoever wants to preserve wealth over time, it's never a good idea to just liquidate like all your holdings in one blast. Like that's where you put yourself at risk of getting left behind in the market because you can liquidate, let's say, your entire stake, and then you're at risk of basically the market ascending to higher levels without you, which often like that is what happens like after like in theory, let's just say theoretically, like there's a lot of selling pressure in this during this time period here. Well, whatever coins that get sold off, there's now a lull of like stakes coming out. So there's that selling pressure disappears. And then the price basically can easily adjust like after that. Like once you have less selling, like the price is obviously going to go higher. So in terms of the staking, what's really valuable over time is the Terra shares or the T shares. And truthfully, like by the time we even get to year 2030, 2031, most people in this market are not even going to be able to afford a single T share. Like that's a term we're using during this market cycle, but it's eventually going to start to propagate down to like B shares and so on over a long period of time, where it's kind of similar to, let's say you look at like somebody that holds like a quarter Bitcoin today versus, like eight years ago, that the same amount of like economic mass would have bought them way more coins at the time. So they would have a much higher rank within that network. So the same thing is going to apply to Hex. And what makes it more interesting is the fact that you have basically T shares, and there's basically an incentive amongst the bigger players to preserve their wealth over time versus other whales. Whereas in Bitcoin, you don't have that same game theory. Like everybody can just hold their coins, but then they're getting inflated away over time with like miners selling. Whereas in Hex, like you don't have to worry about that, and you can actually wisely basically still preserve your T shares without basically substantially losing like your entire bag. And it's going to be pretty crazy just how much money some of these stakes can be worth 15 years from now. It's gonna be pretty wild.
And that's the thing too, right? Like I even see this kind of fallacy with even OG hexagons. We talk about how expensive it is to get hex and all this stuff now, but like the amount of coins you have is almost irrelevant. The game is T shares. The whole game is focused around T shares, getting as many as you can now at the reduced price. And just like Listen to Crypto was saying, is like people will not be able to afford a T share at this point. We already hit at one point we were about worth half of an Ethereum for one T share, and that was literally, we're barely a year old and we're at the half of value of an Ethereum. Like people will not be able to afford T shares, so the verbiage will get changed over to B shares. It will not be a thing. So it really is a game of how much can you position yourself for future with T shares now that you can actually afford, because you will not be able to maintain as time goes on. And we have this.
Sorry.
We have this big period over the next couple of years where you're still able to add to your share rate by continuing to staking out and leveraging more time. but that will eventually not become a thing. Like you will not be able to take your stake will come out, and even if you stake it for the maximum length, you will start to lose T-shares. T-shares will become deflationary at that point.
Right. And I think what is the maximum amount of T-shares in the system? Is it like 10.9 million or somewhere close to that?
Like currently? Are you talking about currently?
Currently.
Are you talking about absolute?
I guess both scenarios.
So I think someone ran it was what, close to Bitcoin supply, ironically enough, like 21 million, 23 million.
Yeah. No, I think it was higher.
I'm talking about singular shares though. Like I think there's like in the quintillions of single shares, maybe.
Oh, we're talking about shares. Yeah, maybe it was like 21 or 20,000 T-shares or 20.
It's over quadrillion. I think it might be septillion actually, or would that be? Yeah.
Yeah.
It's
kind of weird right now. I'm staying in the shared Airbnb, and the one guy I was talking with him for hours. I've been trying to tell him about Hex. He's really into crypto, and he's like convinced that it's like a scam. And I'm like, dude, and I'm like trying to convince him it's not. And I told him I have 15-year stakes. And he's like, dude, we gotta figure out how you can get rid of that. And you're gonna lose.
Can't.
Yeah. and
that's the funny part. You can't.
He's like, tell me how I'm gonna lose it all now and everything. And I'm like, dude, what? Like, no, man. And he just can't. He can't get it.
Ryan, we got to work on your sales pitch, bud.
yeah, dude. Yeah, man. Hey, once Richard Hart finishes that list with all the counter arguments, I think that could be helpful.
Yeah.
You know.
Definitely. And that's why he said he's taking it upon himself, because you can have people do stuff for you, right? Just like Coffee's been working in the design chat with the new Hex website and everything coming out. Like people can do that. It still takes a degree of talented people, but like for Richard, he sees something like the rebuttal list being very important, that no one else can handle that to his degree as far as knowledge and counteractive wit and stuff like that. So the rebuttal list will be very good. If you're not able to really sell people and really describe Hex 100%, like I'm sure the rebuttal list will help in your adoption, getting people on board.
Yeah, definitely. This guy's main question was who pays out the interest, and I told him it's generated through the smart contract, and I told him like 10 times, and he can't get it. He's like, can't get it. And I'm just
refer back to the traditional. Just refer it back to the traditional finance system. Just like we print USD, Hex prints its own currency. That's all you gotta do.
Yeah, but it's like the code in the smart contract. I don't understand why people think there has to be a human being doing all this stuff, pulling the strings in the back.
Yeah,
that would be frustrating for me, man. I've never ran into
it. It was tough, and and he's so concerned, and he's convinced I lost it all now, and I was like.
I love the fact that he said we try to have to figure out how to get you out of those 50 mistakes. It's like, nah, we can reconvene in 7.5 years, but before then, it ain't happening.
That's hilarious.
Or something. So
around 8 years from now, people are going to emergency unstake 15-year stakes.
Can we talk about that? Can we talk about how amazing that is?
Yeah, I think this was maybe a couple months ago. I was on this entire kick on the Discord syndicate about I don't know if you guys ever heard of me saying the Hex super cycles. What's going to happen? So
can you go over it again?
Yeah. So the first super cycle we're going to end up getting, or a little mini cycle we're going to get in Hex, is this next time we ramp up to 10 cents. You're going to have people emergency unstaking 1-year stakes that end up sometime from now to December. Right, and then the next one after that, the next pump from about once we go to anywhere from 10 cents to 25 to 55 cents, people are going to emergency unstake year 1, 2, and even possibly 3-year stakes. And what's going to happen at that point is the price will go down, crash, right? We'll recover back up. If we're still in a bull market into 22, we go into 22, and there's almost no stakes for 22 for the most part, because people are just stupidly emergency unstake stuff. You'll still end up having 20% of the Hex that's going to be staked between year 21 and 22 still there, but a lot of people are going to emergency unstake that. So you're going to see there's just a lot less selling pressure in terms of just stakes coming out. And there's gonna be a lot more hex in the Uniswap pair, I think, as well.
Yeah, and if we have that like within like an Ethereum or Bitcoin super cycle, I think things could get very wild in the next couple of years.
Yeah,
there's a ton of different variables.
Yeah,
and let's just talk about the actual like what kind of impact emergency and stake penalties are going to have, because like now people, they enjoy it when it happens because obviously the staker class gets paid. But honestly, this is pennies compared to what it's going to be in the future when these larger stakes that have been accumulating interest at 40, 60% APY that are like 10 to 15 year stakes, and they decide they want to end at that 5 year, 7.5 year mark. All those stakes, all those OG stakes, all those stakes that were done that have been accumulating interest for 7.5, 10 years at 40, 60% AY, and then gets released to the staker class. That's going to be some serious money. I think right now we're sitting at what, like $1 billion or a couple billion. I forgot what it is, but you're probably going to be talking about potentially like maybe I'd have to have someone actually look at the math, but it's going to be substantially higher. And guess what? You're going to have that larger, or you're still going to have that same slice of the pie that you had back in the day when you locked in your share price, but that pie around you has shrunk over the years. And so guess what? Now you're going to get a larger percentage of those gigantic emergency end stakes. And you're going to see your stakes just absolutely grow when we see these, just like Dollar Cost was talking about, these cycles and waves we get. Because it'll happen when people emergency end stake. And you're going to have these amazing stakes that have 10, 20, 50 T shares, 100 T shares. And they're going to be giant stakes in the system that are collecting giant returns when these big stakes end. Like, it's going to be a lot of money. You're going to see some fat stakes coming out.
And go ahead.
Actually, you could go because there's actually I could show another chart afterwards.
Yeah, let's see it.
I gotta head out. So.
Oh, okay.
Right. Later, Coffee.
All right,
Man.
Thank you
Thanks for coming.
See you, bro.
See you later, guys.
So, and one difference between now and like 5 years from now is 90% of all the stakes in Hex right now are stakes with big paydays attached to them. So people are emergency unstaking their big payday stakes as well, which is bad, dude. That is like that right there. Oh my god, dude! It's like I can't even imagine, dude. Like,
isn't there like a special like you get penalized even more with the big payday bonus or something like that, or
interest?
You just lose all that big payday stuff. You don't even. I don't even think you receive any of that. You only receive your simple interest.
Big paydays just count as interest. So I'd have to go look up the formula, but it's in the layman's guide. So it's just included on the interest side when calculating your penalties.
Okay.
So Staker app will make it all easy for you guys. So when you go in, if you need Staker app, because when you go to do it, it'll tell you like how much you're going to lose. It does all the math for you if you're not math savvy, or if you want to do the numbers yourself, the equation is actually in the layman's guide. But yeah, big payday is included on the interest side, so it's going to give you the penalties are going to hit you harder if you're below 50%, or if you did less than a 90-day stake. If you end before that, it's going to hit a lot harder.
Yeah. And what's your guys' like opinions now that there's not that many Hex like available to buy? I mean, do you think this could lead towards significant price appreciation pretty quickly here, or like what's some of your guys' thoughts that you kind of been thinking about that?
Yeah, I think it's gonna cause some serious like massive pumping, like just unbelievable.
I gotta get some beer for this conversation.
Yeah, because I guess like one like a lot of the analogies like I see on Twitter, which I think are great. Like it's a great way to compare it. Is I think there's one Johnny Chaos that makes like the analogy to diamonds, and effectively like what's happening is you could think of basically Hex itself as a resource to buy T-shares, but that resource has become 4 times as rare. So as you run out of that resource, and then as those resources are being used to basically lock up their coins over long periods of time to be able to mint more coins in the future, you just have this huge supply. You just have this huge shortage of that available resource. Like this is where I think it's really difficult for people to wrap their heads around basically just inflation in general. So for example, for Bitcoin, you have, I think it's like over 2% Bitcoin that gets mined per year, but all of that gets completely dumped onto the market, adding to like the circulating supply. Whereas like in the case for Hex, you have 3.69% inflation, but there's supply locks where you actually don't really see that supply coming into that market, and you still need to use that same whatever cut you are getting of that 3.69%. You're using that to basically buy T shares, which are a finite resource. So you have already a rare resource like with the Hex, and then you have a finite resource, the deflationary one, with the T shares. So we've never seen anything like that where you get this. It could bring the prices to levels we just can't even comprehend. Like it's so insane. Like I can't even really, like I've seen what crazy crypto charts look like. Like if you look at what Ethereum did last cycle, like we could see some serious movements that just 2 months at a time.
Yeah, but also I think we can also see moves downwards as well. Easier. But I think in the long run, it's gonna kind of just go up because it's more rare, paying interest and everything. But I think it's just gonna be more volatile now. But
and that's the point. I mean, look just on the stream, Ryan. Like so, Looks into Crypto and I were buying last night, and him and I alone bought up several percent of the total supply that's liquid right now. Like the two of us made a dent, and we looked at the liquidity pools. You're looking at like a little over 50 million for USDC and E. So you're talking about a little over 100 million Hex that's out there that's left.
That's just so rare now. It's just so rare, and I think it's going to be easy for it to hit 10 cents, 50 cents, even $1. And I think this year there's a really high chance that we can kind of see some crazy numbers. Like really,
it could get crazy. Like Dollar Cost was talking, or Looks into Crypto was talking about. Like it can literally, we can't wrap our minds around it, how quickly this can move and leave you behind. That's why you need to get your positions now. And both of us, we were talking back and forth, and our original plans were to kind of DCA. And then I think by the end of the night, we pretty much, what we did have on hand, like dry powder we had ready, and it all went in. Because and Johnny Chaos, I always like to bring this up, talks about when you're arguing between like an entry point of like 1/10 of a cent, is it really going to matter if you end up missing that window and it pulls away, just like the ETH chart, that we never see these levels again?
True. And what's the quick math then for if there's like liquid, or if in the pool, if there's like right now there's like there's like 550 ETH. So if somebody puts in that same amount of ETH, what does that do to the prices? That squares the price, or that I don't know if any of you guys know that offhand.
It 4x is the price.
It 4x is it?
Yeah.
4x is it, and then 2 lowers the other side of the liquidity pool by 2x.
So effectively by I guess some of the liquidity pool holders, whoever pulls out some of the liquidity, I think they pulled half of it out, I think, on the Ethereum side, Ethereum Hex side. So effectively they made it almost 4 times as easy or twice as easy to pump it or dump it. Essentially,
if
you sell into it, it's going to be more. So increasingly, the volatility increased 2 to 4 times, and then on top of that, you have now the Hex to USD side, which is now equal to the Hex side. And here's the whole thing with the USDC side is that it's easier to actually pump that, because as crypto goes up, the number when you exchange Ethereum for USDC on Uniswap, the number of, because if Ethereum keeps going up in price, you get more and more USDC, and then when you buy into the pool, you wake up the Hex price as well. So we've effectively made it. I think we've essentially, let's just say we're taking an aggregate between the two, right? The USDC side makes it twice as likely to pump, and then the other side makes it 4 times as likely to pump. So basically, we've essentially, Hex is about 5 times more pumpable now.
Wow, that's nice.
Yeah.
That's
right.
nice.
My guy that I just onboarded a couple of days ago, so he's doing a wire transfer. He's going to put in about 60,000 into Hex.
Shit.
And we're playing with the numbers today. He alone will do almost a 10% price impact with that 60K.
Wow.
Uh-huh.
And 60K would get him how much Hex currently?
I'll check right now.
Yeah, I was about to say. I don't remember, but
Let's see,
Yeah, he better get that in before a big whale comes or something.
That'll get him 5.8 million.
Did you do ETH or USDC pair?
USDC.
Okay.
5.8 million.
Is he going to do it all in one go, or is he going to do like a couple different buys?
So I was telling him he should probably break it up, but we'll see.
Yeah, because I guess when Michael Saylor put in all his like 500 million in Bitcoin, supposedly he did it in chunks, like small little chunks, like 100 million here, 100 million, whatever. So like, could be good to kind of maybe break it up. But again, who knows? Who knows?
Yeah,
really?
He would move it to get himself 9.54%.
He did that on he did that on Gemini and Coinbase. He did that on multiple exchanges on an order book exchange. You can't really even do that like on a Uniswap.
This is different. Yep,
this
it's
is
a whole new game.
Because this is the shit that happened to me when I was trying to buy up a bunch of Celsius back in the day. There really wasn't that many people. What I would have to do is I would buy a tenth of an Ethereum of Celsius, come back 4 hours later, then buy another tenth of it, because I would keep the liquidity was so low that I was wicking my price over myself. So I was stuck for days. It took me weeks to get my position, essentially. Wasabi knows. Yeah.
Yeah. I guess I was about to go into like sorry, continue. Because I was going to slightly change the topic, though, still related to the whole slippage people are mentioning.
Go ahead, man.
Cool. Yeah. So what's really important to understand, like with the way the liquidity is set up now, is like, yeah, it's like in theory you could have somebody basically like fat finger a sell, but the thing is the penalty to do that now is far more severe because they are causing that slippage. And what I'm trying to look at, and this is just me. I'm only one person, and there's people with a lot of economic mass. Like I'm just basically a person in the market that. Truthfully, like I have my bags, but I'm not a market maker in these order books that ultimately really big players are pushing to higher prices for everything: Bitcoin, Ethereum, Hex. So the thing is, when you look at the liquidity, there's probably ways on Ethereum at this point. There's probably ways to set limit orders. So you could actually set like limit orders in case somebody basically fucks up and accidentally sells like too much of their bag. And what it would do is wick down the price, and then you just see the price basically shoot back up. It's almost like you have like a very brief, like in theory, somebody could mess up and cause like a very brief like flash crash that then basically instantly gets like wicked back up, because you still have the buy side pressure that's going to come in and fill the gap, because the like if you look at Hex itself as a resource, even if they fat finger it, it's still like it's already a rare resource that you're trying to do to buy the T-shares. So you're going to have the buy side pressure just basically completely wick the price back up. Like a good example of this was there was a pretty crazy like it was just like a flash crash on Ethereum on like a 1 minute, or it was maybe even smaller. It may have even just been like a 1 second candlestick where there was basically like an algo bot that accidentally market sold like their entire stack. And it wicked the price down to like $14, or it may have even been lower than that. It may have went into the cents. Like there was this huge wick on Ethereum that then just instantly shot back up. So whenever somebody's basically using Uniswap and things like that, like this is really for the big players. They have to be really careful not to accidentally wick the price down, because they can literally accidentally like nuke their entire bag and transfer it to somebody else for just like a fraction of the cost, and then you get an instant bounce back on the price. So I think it's really interesting seeing like how the liquidity has been basically adjusted recently, because yeah, it's like if you want to, it's like, okay, like you want to sell 200 million Hex, well, you're going to pay a penalty to basically do that.
And also with that, would you say kind of a similar example would be like right after big payday with Hex, how it kind of dipped all the way down to 0.002 and then it just kind of bounced up, and then it's been kind of rallying since then. But whoever sold like within, I don't know, like a day or two, already their position just got kind of like somewhat nuked because they just transferred to someone else for like really cheap. And and it hasn't really gone. It doesn't look like it's going back down to those levels, and like it's just kind of slowly rallied up. And when I was looking at that analysis, I thought that looked really similar to like back with the COVID dip with like Ethereum and Bitcoin. Like everything just flash crashed, and then it kind of bounced up, and then ever since that point, everything's been kind of rallying up. So I thought that price action of Hex right after the big pay looked very similar. So I mean, but yeah, I think that's a good thing to point out too. Is like the whales have to be careful. If they try to like unload a lot, there could be other whales or other people now, since it's not too liquid, that could just scoop it up, and then boom, the price is right back to where it was, and they just fucked up.
Yeah, and that's why I'm gonna figure out how to set these kind of, because what I'm expecting is like, even in this is still long ways out, but like during the bear market, you sometimes see like these huge, and really whether you get hit, it just comes down to like it's really basically somebody else like panicking, fucking up, selling like they basically panic sell like their stack, that causes like that very brief wick where you can actually get lucky and get your targets hit. So there's just going to be orders that I just set in like on Ethereum that I'm just going to leave and forget, and see maybe one day somebody will fuck up and accidentally like liquidate their entire bag. Cause that's the thing. I'm on Uniswap right now. And in theory, if there was somebody that tried to step in and market sell, let's say like 200 million hex, they would wick the price down by 77%. But the thing is, like, you can just the buying pressure that would just basically buy up those coins is like, it's incredible. Yeah. So if you actually have some like spare ETH to the side, it may be worth basically just trying to set aside some limit orders in case somebody basically accidentally nukes themselves. Because at the end of the day, it's like, like, yeah, they'd obviously be really pissed off that they did that, but at the end of the day, they're the ones that like panic sold, and now they lost their bag to the market that is now, it's basically just kind of the whole wealth transfer mechanism. So that's why like the staking ladders are reinforced, so that you're not emotionally tied to like what you're holding in that instant to make, like, let's say one of these mistakes. Because the nature of the game is like, as we went over earlier in the stream, that the markets themselves spend more time consolidating. And in fact, you probably even have more, I haven't checked on the Ethereum chart, but there's probably just even more red candles, like way more red candles on the ETH chart versus how much time is like on an uptrend. But the uptrends are very fast. Like, they're over a couple of months at a time, where you basically get these huge expansions and these life-changing gains. And you're over time, like, your price floor is basically ascending with the market. So even with your staked coins, to avoid, let's say, being, let's say, overly emotional, it's actually probably not like necessarily like a good idea to like constantly check what the prices are. Like right now it's fine because we're still like in the consolidation, but what you guys are going to see this market cycle is we're going to have a huge expansion. There's going to be the expansion phase of the market, and then the contraction phase. And the contraction phase is where you're going to have people emergency unstaking, transferring their coins to the people that are set up for the next cycle. So now their wealth transfers to the stakers, and then the stakers basically get the subsidy before the next cycle even starts. Like, it's going to happen. And that's why, like, you just map out your plan like well in advance, and then you can really see amazing things. Like, it's incredible. So I have basically my plan already set up, and whatever I have staked, like, nothing is getting emergency unstaked. Like, I don't even really care what the price, like, I have a rough idea as to what the prices could be during the next bear market, just using Ethereum as a reference. And even at bear market prices, like, the interest that is being generated is just like, it's insane. Like, I'm already making like so much money on interest. Like, I don't want to like necessarily like dox like how much I'm making off interest, but it's a lot of money, guys. It's a lot.
And this is the conversation that Looks Into Crypto and I were having last night, and you can see why it's just FOMO inducing, because you realize like it's the same thing with other markets, the stock market. Like, you're going to make a majority of your money within like 5 days of the market. So like, you have to be in there. You have to have your position. You have to have your plan strategy set up. And yeah, like, between going back and forth of that, like, our dry powder was gone so quick.
We had. Sorry, go ahead.
Well, one thing I've been asking people too recently, and Motley and Looking to Crypto, I'm not sure, what your guys' particular ladder or staking strategies were, but my question would be, did you guys kind of have any stakes ending in 2021, some early stakes, and kind of what's your technique for those going forward as those end? Are you kind of like, are you locking in profits? Are you restaking those for longer? Kind of what's your plans with some of your early stakes? Because with mine, and I said before, as I look back, and like, the one thing I think, 2021, having those early stakes is just kind of like, And I feel like it was it wasn't really wasted, but if I can go back, I would probably do those for longer. So with mine that I have ending this year, I'm for the most part kind of just restaking those like longer term, just so I can really preserve the T shares. Because when I looked, and then if you look at your ladder and you see, okay, 2021, 2022, 2023, and your T shares are just kind of like slowly getting burned as your stakes end. And it's like, and then you just have to think to yourself, okay, wait a minute, maybe I should do some long ones, just kind of really be sure to preserve my T shares going forward. So I wasn't sure if you guys had any kind of plans with your short stakes, or what you guys were kind of doing with those.
So we kind of touched on this earlier, and it's not even maintaining. If you have a proper ladder set up in place, you can grow your shares right now, and that's what I kind of spoke on earlier. This next year to probably, I'd say maybe around 3 years, we'll see. I haven't really done the math, but you are able to any small stakes you have coming out or stakes that you have coming out, you are able to still grow your shares by maximizing your time, leveraging your time out further. There'll be an eventual point where that's no longer the case, and you will get deflationary on your shares. You're not able to leverage your time to continue to grow. But that's why for me, for a majority of my game plan is going to be to just continue to accumulate all the way out. The stuff that I do have that does come out, most of it will be getting thrown to the end of my ladder for the next 15 years, because I want to continue during this accumulation phase where I can still grow my T shares and grow my position and the system. I want to do so. So that's much more advantageous to me. I might take a little bit of profits along the way. I do have a couple ones that are coming out this year. I might take a little bit, but then again, what are you selling the value of those diamonds for? Are you selling them for the price of marbles, or are you willing to hold on to them and wait until you start realizing what their true value is, which we could be talking upwards of quarters, 50 cents, $1, maybe numbers that we can't even wrap our heads around right now at this point. And it's just it's a regency bias as well, right? Because a lot of us on the stream are OGs, so we've been here since one Satoshi. So anything from this point just seems almost unfathomable to us. And then that's just it's going to become a forethought as we get to our new price floor. And next thing you know, someday we're going to be sitting at a quarter, 50 cents, $1 hex. And we're like, wow, man, I really wish I'd just thrown a couple more of those stakes out to the end of my staking ladder, and I could be making multiple hundreds of X's more than what I took a profit back in those first couple of years. So that's really what you got to put that mindset, especially for us OGs that have been in so long. You really kind of take a step back and put yourself in that position and realize what you might be giving up for your future self. So that's kind of how I'm looking at it right now.
Yeah, that's a really good way to look at it, because like in terms of because I'm kind of on the side where when I first set up my stakes, like I wasn't as knowledgeable as I am like today. So when I set up my initial staking, like I just if I know what I know today, I would have actually constructed my ladder a little bit differently, because I understand how the T-shares work today versus when I first set up the ladder. And my plan is like when you're going through these market cycles, what a lot of those that last the longest and preserve the most wealth over time, what they'll do at certain points is like the market could go to levels that are pretty unfathomable, where you can basically, like if you have like, let's say a stake that's expiring, you can basically prune off. It's kind of where you can still preserve, let's say, your T-shares by staking those 1 year stakes out longer, but you can do things where you can perhaps like prune off like a certain amount like of that stake that's coming out to basically lock in, let's say, like basically profits that you can move like into other investments. And then you could take that same that whatever's remaining and stake it out longer and still get more T-shares versus like the 1 year stake that you have coming out now without basically nuking like your entire stack. Because I know once you get to like the stage of like, let's say profit taking, even like there are going to be points in the cycle where people are going to take it's like where you see basically the emergency on stakes. Like there's going to be a combination of like high emotions that do it, or for somebody that's like kind of more calm with the and just kind of tuning out with the market. Like Richard basically describes it in his streams where you can basically peel off and then restake your coins for a later point in time. So the peel off approach is what's gonna that's gonna allow you to preserve your T-shares at least for the the first few times you're able to restake it if you're staking it out longer. So there's ways you can basically still get, you can pull, let's say, profits out of the market, but still maintain like your wealth in the system over time. And then that way you're not getting overly emotional to like the volatility that is going to come. Because I could tell you, like, Ethereum, if it goes to, let's say, some unreal number this cycle, it's going to get completely, bear markets are going to nuke the entire market, but all that really matters is the price floor shifting up. And I wouldn't be surprised to see the price floor, like if you compare the price of Hex today, I wouldn't even be surprised to see the price at like 3 to 4 cents, like higher than it is today during the next like bear market, wherever that is. And I'm not sure where the next bear market is, but it shows like, it just shows how important it is, like these consolidation periods, because they do eventually allow like the price to shift up over time, because the expansion phases of the market are temporary, like those last during the bull market cycles. But the thing is, like, if you're content with the interest you're getting today, and if you're content with, let's say, multiplying it by 3 to 4 times the amount it is today, and this price talk is speculation. I don't know if this is going to be the exact amount, of course, but like, let's just say hypothetically, the price during the bear market is 3 times higher it is today. If you multiply like the amount you're getting today by 3, like that's a lot of interest that's accruing during a bear market, a time that you don't even really want to. You want to basically keep holding on to it because you want the next market cycle and so on. So the thing is, like, you don't have to. You never want to just completely sell like your entire bag once you get it. Like, you just prune amount that makes you happy, and then it gets to a point where you don't even really have to look at the price day to day. Because I can guarantee, like, this is where I think during the bear market you're going to see a lot of emergency unstakes, because a lot of people, myself included, I look at the price a lot, which is because that's we want the price to go up. Obviously, which it is. It's going to go up. It's going to go up a lot. The hard part is going to be during the bear market side. People, like, they're going to see the number go to this unreal number during the bull market, and then they're probably like, there's going to be people that aren't going to be prepared for the bear market side, like the contraction phase of the market cycle. So the staking at least like prevents you from making that mistake. And then the peel off approach that Richard mentioned is just a way for you to, he describes it basically as everybody gets the feast. And you can basically do that without completely annihilating either your bag or like during the bear markets where people are liquidating their bags, like annihilating the price until it hits a higher low. And then you hit a new reaccumulation phase that sets up into the next market cycle. So the ones that have, let's say, that long-term mindset, that have a good way to peel off, are going to do extremely well. And there's multiple ways you can do that. If you want to set really long-term stakes, let's say 10 to 15, which you can't, once you do that, you're committed. You cannot emergency unstake that. You could also hold like a certain percentage of your stack like liquid, where you want to peel that off, and then perhaps you want to restake whatever coins you have coming out. So there's kind of multiple ways you can go about that. So
and also one thing I was thinking, which I kind of talked with Dollar Cost before, and I'd like to kind of ask you, looking at crypto, and Motley and whoever else would want to tune in, is like, you know, at some point, I feel like, you know, with these kind of the bull markets, the bear markets, at some point, it's kind of smart to like take profits at some point, you know. So I guess my question would be, if you've thought about it, you know, what would be your particular profit taking strategy as we go into this next bull market? You know, have you thought about kind of like how you're going to approach that? Are you even going to, you know, even take profits at all? Or you're just going to kind of keep playing it long? Do you want to maybe do like, you know, maybe dollar cost average out in some things? Or I'm not sure if you kind of have any kind of strategy for, you know, locking in profits, just because, you know, if, and of course, Hex may not perform similar to like other coins, like through the like past cycles, you know, the past bear cycles, but, you know, if it has some kind of similar performance, holding through that 2017 bear market was miserable. Miserable. So if you can even lock in little percentages just at, you know, when it's really, when you think it's at like a really high overextended point upwards, it could really kind of save your position or save you some like just time of years of whatever. But again, you know, with Hex, when you're locked up and you're staked, you're accumulating that interest over the time. But I mean, there's a lot of variables, and it's hard to predict what's going to happen. But I just wasn't sure if you had any particular kind of like profit taking, strategies kind of in mind that you wanted to like apply during this next cycle.
I mean, that's kind of what we just went.
Guys.
Later, Brand.
Thank you for the opportunity.
See you, bro.
Catch you on the next time soon.
Yep.
Sure.
Bud.
Take care, man. Take care, bro.
But I mean, that's what we are literally just getting done talking about, right? Like, so like you got, as our stakes, we do have stakes coming out throughout, and you just gotta prune. You gotta do what makes sense to you. Like sometimes it's gonna come out. Maybe restaking at that time makes more sense to you. Maybe pruning it out. Yes, Hollywood Squares. Let's go. Tic tac toe. But that's like what we're talking about, right? Like it gives you affords you the ability to do what suits you. Like for me, I don't need to really take profits. Like again, like we're kind of talking with the De Beers, Saints, and the Diamonds. You're giving away your perpetual money machine at this point. And are you willing to do that for a mere cent, a mere penny? When we know that this year alone, we're probably going to see multiples of X, maybe 10X, maybe 25X, who knows? But are you willing to do that at this point? I know. I'm kidding. So if I have you on stream, I can be conservative and you can take it to the moon, and then we can look into crypto go to Saturn, and then we're good. But someone can give a slightly more conservative approach. But like that is the strategy, right? Like it gives you the flexibility to grow your T shares, maintain your T shares, and cut some profit. You could even get out of your position even more so than what you want to. It gives you options. You can leverage your time. You can take more profit, but then maybe leverage more time. It gives you that flexibility as you move forward. But even bringing up the bull market and how devastating it was, like you were just talking about, Hex is different, right? Like there's hasn't been anything like it before. And I'm actually very excited to, ironically enough, like, of course it's going to suck because everyone's stuff is going to go down. It's just how crypto works. But a small part of me is actually very excited to see what happens once we finish out this bull cycle and we do go into a bear cycle, and see how Hex reacts. Because I think at that point we'll have blown through a lot of gates. Hex will be much more well known. Maybe some very big players, maybe a big mainstream investors like we're seeing now in Bitcoin, Ethereum, and the big common like top 3, top 5. And where are you going to put your funds when a bull market comes around? Are you going to hold that thing that's just going to continue to drop in price depreciation? Or are you going to find something that maintains you yield through those years of a bear market? Hex could be one of the first cryptos where you actually see some either a pump or drastically less of price depreciation during a bear cycle. And it's something we haven't really experienced yet. So we don't really know. We don't have the information. But I have a feeling if Hex gains the adoption, which I think it's going to over the next year or two, a lot of big players are going to move their economic mass into Hex. Because if you have something that has the highest APY in the market, doesn't touch any third parties, why would you not move your economic mass into Hex during a bear market? It literally makes no sense to me. Where even your blue chip Bitcoin is going to go down 85%. So you might see some stuff with Hex that you've never seen with any other crypto before in bull market, and you're gonna have to rewrite how you actually view a bull market moving forward when you're in something like Hex, because there's nothing like it that's been around before this time.
Yeah, and when we even get to the point where we are, let's say, in the contraction phase of the market cycle, because all right, so for example, now we have the dip in prices. Ethereum pulled back from $1,200 to like $1,000 per ETH, and then Hex went from I know it did that wick in the price, and then it's like roughly around a cent right now. What you're gonna see is that same kind of psychology is gonna play out, except it's gonna be at the next higher band. So for example, if there's people that are having trouble psychologically now, where they're emergency unstaking, let's say like at this level, you're gonna see basically that like a similar pattern play out at the next like higher band. So let's say Hex goes to you, and not financial advice or specific price targets. I have no idea what the price is going to hit specifically, like, but I have very high confidence it's going to be more than any of us can expect. But let's say the price hits like 60 cents or something like that, right?
There we go. There we go.
And then during the bear market, it does a contraction to like 10 cents and you get wicks. Like, so psychologically anything under 10 cents becomes like very psychologically like a good deal or something like that for people that want to accumulate a bag at, let's say, this new higher band that we're referring to. So during that contraction phase, there's going to be people are going to basically be looking at like the prices constantly, and the whole market's going to be in red. And then like repeatedly doing that over and over again is going to make them some people are just not going to be able to make it. It's going to happen. Like psychologically, they're not mentally like preparing themselves for, and that's the thing. Like the bear markets are really times where people get rich. Like you accumulate so much. It's the quote that dollar cost is where during the bear market is where you accumulate wealth. And effectively, you saw that even with Hex, like with the consolidation it's in right now. You could say that constitutes as like a mini bear market for Hex, right? So you have this really long consolidation. You have basically people accumulating over time, strategizing like their long-term stakes. They want a minimum amount of t-shirts they want to have, and perhaps they have a plan for the peel-off approach to take profits. So that what it does is it gives you opportunities over time. Like if you're not selling your entire stack and you're just peeling off small portions, you may find yourself in a situation in the future that during this bear market, when you see people fudding out, you're basically going to have money to buy up those coins that they're fudding out of. And then you have these new price floors that are getting established. So I would just suggest like during the, like right now, everything's cool. We're in a bull market cycle, but what's really interesting is like people today that are having a hard time with these pullbacks during a bull market cycle, I just don't think they're going to make it through the bear market, because the bear market's over a much longer period of time and it's psychologically much harder than where we're at now. So that's where you're going to see a huge wealth transfer. Those people that FUD out during that contraction phase are effectively going to be transferring their wealth to the stakers that remain committed over that long period of time, because the game theory is set up in a way where that money is being transferred. And what's awesome is like there's so much supply that cannot be dumped onto the market as a result. Like it's like the best, like the fastest churning I've ever seen of people that FUD out and want to sell, but then basically they're penalized as a result, and their wealth is already getting transferred to the long-term thinkers much faster. So it's just it really does reward like the what's referred to as, like Richard says, it rewards honesty. And that's basically what the staking ladders are. Like you committed to a certain length of time, and you make it to that length of time, and that's what the system is basically rewarding, is that quote unquote like honest behavior. So yeah, I would say just psychologically, guys, like the next bear market, like it is going to happen eventually, and it's going to be at higher. I'm expecting higher prices, much higher prices than we're at now. But if psychologically, if you're having trouble today, you're going to experience that same psychology at these higher prices, and you're just going to be more likely to make a mistake. Like just, get your strategy planned out, because I'm telling you, like, you don't want to be the guy that once had basically like 1,000 Bitcoin that can now buy 2 Bitcoin today because he sold during a contraction phase.
And that's the thing about Hex, right? Like it forces you to have strong hands. Like that staking feature locks your hands where you can't do it without physically nuking your account. And imagine if that feature was available to guys that had Bitcoin back in the day. Like they had no way, when it went from a penny to 30 cents, like when Richard bought the top, like they had no idea of knowing that the next move they're going to $1, $30, $300, $1,000. Like, how many X's that is? They had no idea. And like most of us, even ones right here on chat right now, probably don't have strong enough hands to lock all the way through that. Like we just don't. But when you're actually locked in by code, and your stake that you made years ago when we weren't where we will be in the future, like you just physically can't unlock what you have. So it saves you from yourself. It saves you from numbers that your mind today can't even fathom, and your future self will see and be thankful that you actually utilize what Hex does and locked up this beautiful set of diamonds that you didn't realize were diamonds at the time.
Yeah.
And just really quick, guys, one thing I was thinking about, like some super moon math. I'm not sure if you guys have talked about like future price predictions at all or speculation things, but like, I've kind of mentioned before how I think like, my reasoning why I think Hex is going to hit $100 within the next 6 years, just doing like the 2 million X from the all-time low. Bitcoin if you apply the same 2 million X from when Bitcoin was at 20K to Hex's all-time low of 0.00005645, that gives you about $112. But I did my calculator now, and now that Bitcoin has done well, if you want to get really moony, and Bitcoin it did a 4 million X since it just hit 40K, that would be Hex at $225 if it performs the same X multiple from Bitcoin all the way up to from Bitcoin's low to 40K, applying that to Hexes, but that would be like in like 8-10 years.
$200.
That's
$225, but that's like really. I mean,
that's Saturn. That's Saturn, right? And you don't even have to do it that much. Do what it was designed to do, right? Like, and all the verbiage that people gave Richard shit for and put it on the website, it's designed to do a minimum of a 10,000 X pump. Like, it's designed. Will it get there? We don't know, but that's what it's designed for. So do a 10,000 X from that low. I think it's going to be like $3 or something.
It's like 56 cents, and then a 20,000 X is like $1.12.
I'm pretty sure 10,000 X is higher than that.
Because 0.0, because I've done this one a ton of times. Yeah, 56 cents from Hex's all-time low is the 10,000 X, but at 20,000 X, make it nice and even. That's $1. So why
even?
Yeah, so, why not just blow through it and do a 20,000 X?
Yeah,
So,
and I have a great way to kind of key into that discussion there, because what I'm going to do is I'm going to pull up a chart because. In general, so this is really setting up the stage basically for Hex and like Ethereum for the next basically decade, especially Hex with like the way the coins are pulled out of circulation. And this is why I want to say like the price targets could go to these really high levels that are really hard to like visualize today because of the amount of X's it could potentially do. So what I'm going to pull up here is this is a chart of DXY. Is everybody able to see the chart I have up?
I'm not seeing anything right now. Oh, okay, yeah, there it is.
Okay, cool. So this chart here, DXY, this is the US dollar currency index. And what it does is it measures the strength of the dollar relative to a basket of other currencies. So you could just think of the basket of government issued currencies across like all the countries, and then and the dollar dominance relative to that basket. So we're now entering, and what I'll do is I'll first put a vertical line where Bitcoin first came into basically existence, which was right around, I think it was right at the tail end of 2008. So if we let's say we put a vertical bar over here. So the US dollar, which is getting over time, you have more and more getting printed into circulation. The US dollar index actually increased relative to that basket over that time span. It went from a dominance around 72% after the 2008 crash, and it peaked around it went from 72 up to roughly like 97 in that time frame. So now the DXY pair is it's showing weakness again, and it's going into I actually think it's going into its next bear market. So during this time, like even though the US dollar was doing better than, let's say, a basket of these other currencies, Bitcoin and cryptocurrency in general had massive gains. And this is the first time in history we're now likely going to be entering a bear market for DXY, because there's a shit ton of money printing. So you have to realize that there's a shit ton of US dollar that's being printed, and there's a shit ton of other government issued currencies that are getting printed. But there's more, like the US dollar, like there's so much being printed that it's actually weakening relative to that basket, just showing how much money or these government issued dollars that are going to be entering into the market, inflating the prices of assets. So if you look at the cycles here, it's very possible that this pair goes into a bear market just from all the money printing. And then it basically sticks to the bottom of this channel for a bit before finally pulling back up into it's next phase of the market cycle. So at the end of the day, everything is cyclical. And during this period of time where you have a ton of money printing, this is going to push up the prices of assets up substantially. Yep. So cryptocurrency is amazing. Like real estate's going to go up. And then you look at like, and then if we relate it back to Hex, like you have the coin locking, and then just the massive APY is a huge hedge against all the money printing that's taking place. Like there's a very, very good, I don't even really want to call it like a narrative. Like it's more of a truth that you have this opportunity as like a hedge against the amount of money that's money printing and things like that. And we really could be entering basically a super cycle for cryptocurrency in general. And a super cycle for the price of Hex could be, we just may not even be able to fathom it. So I know people like to, laugh in terms of price predictions, but like, I mean, anything really is on the table at this point. Like this is going to be pretty insane when this starts to basically drop and go into a bear, because there is a lot of speculation that with the Democrats, they have the presidency. I think they actually control a majority of the seats in the Senate as well. We're just entering a different era in time now, and we're kind of caught like in a situation where the unemployment's really high. There's a lot of people that don't have jobs, and really the only way like things can keep churning is printing more money. There's really no other way out of it. So that's going to basically make finite resources extremely valuable. So T-shares, finite resource, and then on top of that, like Hex, the fuel to get that finite resource, it's already a rare resource you need to just get, let's say, these kind of T-shares. So I'm expecting incredible things, but I'm just going to let the market ultimately decide what kind of valuations we see. And that's why during the bear cycles, like the people that are that remain the longest are going to have just some incredible things, let's say around like year 2034, 2035. It's going to be pretty mind-blowing just how much economic mass that can represent like in our future. So make no mistake, it's going to do. And if you look at this chart, like this pattern here is very cyclical. Like it's happened multiple times in history. Yep. And it's going to happen again.
And just like look into crypto said, like the name of the game just becomes wealth preservation, especially for the elite and the people that are very smart, that are already in the wealthy tier. And it's really moving your what you have USD into assets that are going to maintain your wealth through these bear cycles. And the smart players, and you could just see unfathomable amount of money moving into these asset classes. Mm-hmm. Like real estate, crypto might be where we could see that super cycle, essentially mass adoption, some very, very crazy numbers.
Yeah.
So, just to go to Ryan,
go ahead.
Just to go to Ryan's original question, right, of like, how am I taking profit pretty much in this whole system is, well, I mean, this is what I'm personally doing. Other people can do other stuff, right? I'm taking my principal plus 50% of the interest and staking it out. I'm doing the principal out 10 years just to triple my shares, right? So as an example, right, like let's just say I have 100,000 Hex stake coming out, right? It's about 11, 12 T-shares, roughly around there. When I stake that 100,000 out 10 years, it turns into about 18 to 19 T-shares. So I end up getting 6 T-shares for staking out 10 years. Dope. Mm-hmm. Then what I do from there is with the 50% of interest, which is it's like 30,000 Hex, maybe a little bit more than that, roughly. What I do with that is I just look at in essentially, do I have a hole somewhere? Where can I put this? And I put it somewhere between year 4 to 10. That's what I do personally.
So what's your reasoning for doing 10 instead of like 12 or 15 or 5 or?
No. I meant it as an example because after 10 years you can't gain any more T-shares.
True. Okay. Yeah.
So I'm just building the ladder going like this.
Okay. From 10 plus
to 10 exactly.
Yeah.
Like if I have a lot of Hex already coming out that time, then I've mostly been putting it out from the 12 to 13 year range right now because that's where I am right now in my ladder. The 10-year ladder that I'm doing, or the you know what I'm trying to say?
Yeah, but then with your other 50% of your interest, are you just keeping that liquid? Are you like
just liquid, and I'm be selling into pumps, into huge pumps. That's
okay.
That's what I'm doing. Yeah. That way, look, my t-shirts are always going up. I've got a little hex for now, and then I'm also staking some of my prints, some of my interest out from past this bull, because obviously I personally think that 2023 like 2022 we're still going to be in the bull market more than likely. It's very high chance we're still in the bull market. 23 less likely, but if it does, I put a lot of hex on that year. So I'm putting these stakes out to 2024. And then I'm building another ladder where I'm seeing holes. Like, you know what? I'll boost that up. Or usually what I wait is I'll wait for a couple of stakes. So so that interest payment gets big enough, and then I stake it out. So it's got some size to it. I usually don't like staking under 50,000 hex on a stake, on a 4-year plus stake. But if I just feel like it, I'll just fucking do it. I don't care.
Yeah. And then last time we spoke, dollar cost, you said that you were thinking like possibly that we may be topping out, just like the overall whatever, like the crypto space, having like some kind of like a blow off top potentially maybe this year. And then we kind of had like that, like the recent kind of pullback with everything now. I don't what's your like, are you still thinking we might have a blow off top this year, or do you think, and have your thoughts kind of changed a little bit?
I need more information right now. Like, it's a little too early into the year. I'd like the soonest I think I would even have an inkling of like it could happen would be like April.
This cycle's different, right? Like, this is something we haven't seen before. Major institutions moving in and essentially causing or starting the bull run, which it really hasn't even started. And so you're talking about a player, mainly Grayscale, coming in and buying up they're probably getting close to 4% of Bitcoin right now. And they're not going to be selling that anytime soon. Like, they're going to buy it up to the price that they probably already have predetermined. And then right now you're seeing this pullback. It might just be a little bit of shakeout, and then they can go into their next investment opportunity. They might start going more heavy into ETH and Litecoin and some of the other major coins that people are going to see. That's going to be mainstream, that they're going to see in that top 10 kind of chart, and they're going to continue to accumulate their bags essentially. But we're kind of like in uncharted waters, because we've never had an entire, essentially what we think right now is a bull market, but it really is just induced by some serious financial institutions that we haven't really had in the space to this degree.
And plus with like the whole global kind of macro situation with like the money printing and just kind of like, and then moving towards a digital society and the well, I'm not going to say the word of the the virus and everything, but like, and it's just it's a very like unique situation of something we've never seen. And it could be that special formula for that crazy super cycle now, and things could get wild.
The longer we're in the bull market, the more money we're going to make, but the worse the bear market's going to be.
Mm-hmm. Yeah.
So the absolute most bullish as bull market we could have is it dies in 2023. Okay. And I gambled some stake like earlier on. This is my thinking in 2019. I mean, I threw some stakes out to 2023. I really did. I was like, I'm gonna maximize my possible profit taking into these 3 years, but also like wasn't stupid enough not to have stakes out to 10 years and then 15 years as well. So I like, if you plan out your stakes properly, you can have hex coming out. Like, I have hex coming out for 15 years straight. There isn't a year I don't have money coming out. Like,
nice.
And this gives me movability essentially, where some people maxed out more just for longer stakes and stuff. But that means I also feel like I personally think like someone like a Kareem and stuff who's got very long stakes, that's cool. But I know he has some shorter stakes as well. So there's some people that are YOLOing a lot of like these 10+ year stakes all the time, and I don't think they're going to hold.
They don't have the support.
They don't. It's impossible. Can you imagine you're some broke ass kid? You got a 10-year fucking stake of
year 5,
or a year at around year 5, and hex is like a $2 or $2.50, $2.30, and you're telling me you're not going to emergency unstake that million hex stake at 10 years, like a fucking like what $2.3 million. Even if the dollar has lost like 40% of its fucking value, it's still $1 million of purchasing power today. You think someone's not going to do that?
Yeah, and say like let's say all he had invested was back when Ethereum was $8, and he did one adoption amplifier purchasing picked up 1 million hex that day. Like his in total investment was $80, and you're telling me at year 5 he's looking at 2.3 million. It's a very good chance he'll unstick, and then he's going to miss out on some what he thought was amazing gains. He's going to miss out on even more amazing unrealized gains because he didn't structure properly.
And this is
why I think it's
go ahead, Ryan.
That's why I think it's very important to have like just different stakes at different times, like a nice kind of, have your ladder set up in different gaps, fill your gaps, have some coming out at different times. Because if you just have one big emotional stake, I mean, that's really long term. You're going to be thinking about it a lot, and you can get emotional. And usually with investing or crypto, when you kind of eliminate the emotions, you usually make more sound kind of judgment and things. And when you start making your decisions based on emotions, it can start getting bad. So I mean, that's a good point.
Yeah, and even going back to like the 15-year thing, because if you look at the way Kareem has like their ladder set, Kareem also has like he has sources of income that are coming in. Like he actually has really good sources of income that are coming in during that time period. So if you're more in a situation where you're not generating money elsewhere, then it's also good to basically have, let's say, construct like a staking ladder so that you're not emotionally, you're not basically as exposed. Because it's one thing like when somebody has income that's coming in, which Kareem does a really good job of that. Like he like since financially, like he's in a really good position. So it's a different game when you have basically those streams of income that are coming in, so that you're not as emotionally tied to the market versus somebody that is not quite in that same situation where they either don't have, let's say, those streams of income coming in, or it's not an amount that's really beneficial to them or sustaining. So that's when you're more likely to put yourself in those situations during basically the bear market. So I think basically for most people, the recommendations from Motley, Dollar Cost Crypto, like there's a lot of good recommendations there in terms of how they're setting up their staking ladders that would apply to, like, let's say, the majority of the people. And then you have basically also like a pocket of investors that are more in line with what Kareem's doing, where they have these revenue streams that allow them to set up these 10 to 15 year stakes without even paying attention at all to the price, because they have these streams coming in. They relative to like their economic mass, they don't even care. Like, for example, the buyers of let's say these accredited buyers through Grayscale and such, there's going to be players that enter the market. And granted, like we all know Bitcoin is a boomer coin at this point. Like that part is definitely true. But the people that are the economic mass that's coming in into Bitcoin, like there's going to be the players that buy at, let's say, $30,000, and they're not even going to like pay attention to the price of it anymore. Like they're basically using it as a hedge versus like dollar printing. Like that is a very strong narrative that is definitely taking into effect, most definitely with cryptocurrency. So at a later point in time, as basically the participants in this market get smarter, they're going to realize there's other options where they can basically generate yield on their assets and put their money to work for them while they're using these things as basically like a hedge, versus just the nature of like government issued currencies that over time they are going to go they're going to become worthless at a certain point. So it's crazy just how few like understand this. And it goes back to like what Ryan was mentioning earlier, where he was trying to explain it to somebody and they kept like insisting it was a scam because they didn't understand like how it worked. Like it's I guess as a starting point, like somebody needs to first off understand like just inflation, just as very basics. Like just even though like everybody here like understands that, like they may not really understand what that actually means in practice to like the valuation of assets, things like that. And then you go into like more detail as to what it means to the believers of a system, as opposed to like Bitcoin today, where you just have constant selling pressure that's getting dumped and diluting everybody that's holding the coin. Because that sucks. Like in the bear market, like I was buying like a lot of Ethereum in the bear market, and it just sucks like not having that kind of ability to generate like yield on the assets. Like even now, like I look at the big payday bonus plus like so I haven't even factored in the crazy part is I've only been looking at the yield just from what I'm getting from the 40% APY. The yield that I'm getting monthly is already incredible there, and I'm not even really factoring in what I got from the big payday, which is also like really substantial. Like it's a lot of money that came from that. Like so,
it's over 30% your entire bag.
Yeah,
essentially.
Yeah.
Mm-hmm.
Yeah, because I wonder if like the thing people don't understand, like they probably have trouble. I don't know if this is true, like in the case for when Ryan was trying to explain Hex to somebody. I'm not sure if they understand how like the 40% APY translates for the staker class and then what it means to like the total coins in circulation. Because like if you take, let's say that I just don't think they understand, like if you take 3.69% of the inflation coming in and you split that across the believers based on the T-shares, I don't think they understand how that relationship, like how that works between the two.
Yeah,
3.69 spread out amongst 10%.
Yeah, he was just, and I was really trying to go slow, and I feel like I was answering everything really good.
Yeah,
and he couldn't grasp it, and he's been doing research on Hex for like 2 or 3 days now, and he's convinced that it's a scam, that Richard Hart is behind it, and all this stuff, and I'm telling him like no, and I'm
ask him what's he invested in.
He has Bitcoin.
Okay.
And he has something where he wants to see BSV fall. So he follows BSV and he thinks it's a scam, and he's like really into BSV and seeing to its downfall. But and he has Bitcoin, but he's like obsessed with that. So he follows crypto and stuff, but like he's not into Uniswap or DeFi or anything like that. He's never used those, but like he's so convinced that I lost my money on my 15-year stakes, and I was just like. But like really, and I was like, dude, like relax, man. It's like I'm taking the risk. It's on me, like
it's perfect, right? So like he's invested in Bitcoin, so that's a beautiful mirror to hold up to him, because Hex is pretty much, it does a lot of what Bitcoin is. It's going to be a store of value. It does everything Bitcoin does, except to a factor of like 1,000 better in every category. And then on top of that, it's actually going to generate you a yield just for doing the same thing Bitcoin holders do, which is hold. So you can present those arguments. If you go on hex.com, Richard's already put those relations between Bitcoin and Hex on there. So use those. But the biggest thing for you is going to be finding out where his gaps of knowledge are, because there's a mental disconnect with him that something's not lining up. So you have to figure out where his it might not even be in cryptocurrency or Hex. It might be actually something just financially, or he just doesn't understand how inflation or money printing, or there's some sort of gap of knowledge in his mindset that's preventing him from seeing what Hex is. So it's going to be on you to find out what that is and to fill those gaps in his knowledge. So that's what's eventually going to win you the sale and win you kind of that eye-opening realization that he's eventually going to come to, once you can find out where his knowledge deficiencies are. And it's beautiful that he's very set on Bitcoin, because it gives you the perfect juxtaposition to put Hex right next to it, because it goes after essentially the same market. And this is why Bitcoin maxis actually really fucking hate us, especially the intelligent ones, because they realize that Hex really is a threat to the Bitcoin market, because it does everything Bitcoin does to a better degree, because it does everything Bitcoin does better, and then it gives you a yield on top of doing what Bitcoin claimers want to preach from the fucking rooftops, to talk about how to hold and price appreciation. Cool, we got that, and then we get a 40% yield on top of it, if not more, if you stake out longer. So they feel threatened because their bags are now almost obsolete, because there is a superior product that wasn't in the marketplace when Bitcoin was making its appearance on the scene.
Damn, dude.
Yeah.
Must be getting tipsy, dude. I thought I looked like Billy Mays right now.
Billy Mays.
Yeah.
So the guy that like sold like Flex Seal and shit.
Yeah.
And all the other products.
What's also and this is actually for like the entire, most people in the cryptocurrency market. I don't like, there's kind of this delusion. So I'll first relate this to Ethereum. So you have Bitcoin maxis that absolutely hate Ethereum. Like they absolutely hate it. They can't stand it. And there's this narrative that since Bitcoin offers a rigid monetary structure, meaning like there hasn't been any hard forks, it's stayed true to like the halving cycles, that that will basically set it in stone as like the greatest thing on planet Earth forever. So now let's flip over to Ethereum, which has protocol upgrades. It's expanding basically. Like the block space has been. It's incredible just how much demand there is for the block space on Ethereum. Like that truly does have value, driving up the fees that we're seeing today. And I often see arguments that since Ethereum has these hard forks, that's going to be bad for the long-term value. But what people don't realize, so now I'm going to flip over to EIP 1559. So on Ethereum, once this protocol upgrade is baked into the protocol, it means the inflation schedule is actually going to be better than Bitcoin. It's actually going to act as more, it's going to help basically cap out the supply and just lead to less selling pressure. And what most people just cannot wrap their head around is that if you look at all the coins in this market, so if we now rewind back to Bitcoin clones, for example, they offer no unique features or attributes that basically are advantageous in terms of like selling pressure versus Bitcoin. So all the clones, they end up getting washed out and they die. Like they get nuked out of the market. They bleed out forever. So, but then once you actually look at the like better forms or just monetary policy that starts to reduce selling pressure, like that, to me, it's like it's already obvious like how that's going to be way more beneficial to the price long term, and just people just cannot really like comprehend that. Like at the end of the day, like it all comes down to selling pressure, and this is the first time we're having these unique attributes that are basically trying to choke off the selling pressure as much as possible, and then adding these penalties in place so that they end up actually transferring their coins to the staker class. Like this is one of the best, like this is really just the best I've seen for really just keeping the long-term believers being rewarded over time, like even during these contraction phases of like market cycles. So I just put my bets on whatever has better, it just has better features for price pumping, just to what it really boils down to. So at a certain point, like Ethereum is going to have, once EIP 1559 is baked in, better features than Bitcoin for price pumping, and then Hex has better features than both of them. Even once Ethereum has, let's say, EIP 1559, there's still more attributes in Hex in relation to Ethereum, and I do think Ethereum is going to do incredible this cycle. That contributes basically to price pumping because there's just more mechanisms in place to over time reduce the selling pressure.
20K ETH, baby. 20K ETH.
It's coming.
Mm-hmm.
Yeah, that's only $2 trillion in market cap.
Yeah, that's
how much?
2 trillion.
Wow. Yeah, that's
chump change.
10K.
Yeah.
10K is gonna hit. 10K. I mean, okay, 20K maybe. Okay, depends on the market, but yo, that 10K coming. That coming, but like, yeah.
Yeah.
That shit gonna hit, bro. I'm saying you can bet the house on that one, bro.
Yep.
Mm-hmm.
Already did. No.
You ever seen that meme of that dad? He's like, "Here, son, here's $20, and you put this into a good cryptocurrency like Bitcoin." And then the kid runs off
the vending machine.
Bitcoins? No.
Yeah, I love that one.
I was gonna say, have you guys heard that song for that Corey the investor made?
Mm-hmm. It's good.
Yeah, I was just listening to that recently, and like the ending part where it has like whatever he did with Richard Hart's voice and how Richard Hart's explaining like monetize like the price going up and stuff. Like, man, I was just listening to that, getting so hype, just getting so pumped. Like, yeah, let's go.
And that just goes back again to just another X factor of Hex, and it's just the community, like, and it's in all regards, like everyone's talented. Everyone in this stream is very intelligent. There's numerous Hexicans that are amazing designers, web designers, game designers, media, marketing, anything you can think of, any walks of life. I've seen just about every, and this is only something that's really known to Hexicans that are very deep into the community. We know what kind of talent pool that Hex draws on. It's really drawn in. It's a beautiful thing. It's drawn in a community that is incredibly talented, very intelligent, and they have every kind of skill you can think of under the sun. And it's only going to further the adoption of Hex because they're willing to commit their time, just like we're doing right now on a multi-hour stream, and give this knowledge out, send it out there, do marketing, crypto Kool-Aid, designing sets like mine, just whatever they can offer, whatever their strengths are in life and stuff that they've been successful throughout the years, they're willing to give that to a degree free for the community just to see Hex succeed. And like with that kind of driving force behind it, and then you have the price of, you have the ability that eventually the end goal, everything with the game theory of Hex is to pump the price, and everything just points to the freaking Saturn, not even the moon. It's Saturn at this point. And we can't fail. And that's why from day one, there's never been a single doubt in my mind, regardless of the FUD that we've seen throughout this past year of different members or different people exiting the project. Like I never had a shadow of doubt, like maybe I should get out of my position now and just wipe my hands of it. Like it never even crossed my mind because I know how talented, how amazing the community is. And I've never seen not only anything like it in crypto, but honestly, world, like outside of crypto and the real world and real communities outside of the crypto space, I've never seen anything like this. So this truly has drawn a group of like-minded individuals that are incredibly talented, incredibly intelligent, and I've just never seen anything like this. So I know without a shadow of my doubt, like we're coming for that number one spot, regardless if Bitcoin holds it, if Ethereum holds it. Like you all have whatever you have, whatever position you have in Hex or what you're about to acquire, you have the next number one cryptocurrency that exists. It's just only a matter of time, and it gives you the tools to actually reach that point in time. It's just, are you going to utilize them to effectively, essentially? So it's some pretty heavy stuff if you take a step back and you really realize where we're at right now. We're at the ground floor.
Very well said. But hey guys, you know what? It's like 1:15 my time here, and I'm getting kind of tired, so I'm gonna sign off. But it was really good, kind of just jumping in and chatting with you guys for a bit. Awesome talks tonight, and I'm sure I'll see you guys again in the future. So
yes, sir. 15 years.
Sounds good.
15 years.
Good night.
Yeah. So all right, guys.
Later, bro.
All right, see you around.
See you guys. Bye.
Perfect, man. I think we should end the stream in like 14 minutes just to make it a solid 3 hours.
That works for me. I can go to bed at 1:30. For all you West Coast guys.
Yeah, I'm pretty wired right now because I drank. So I took a power nap before the stream. Had some coffee, so I'm not tired at all.
I was the same way, right? Like I wasn't feeling well, so like I actually got off work early, got a power nap in, and then took a little bit of energy drink. Now I'm drinking a little bit to try to counteract it. And then, hopefully I can go to sleep after this. But I mean, it's hard, right? Because like when we go to sit down after this, like all this stuff runs through my head for the next like hour or so. It's honestly, it's taken a little bit of a toll on my health over this past year because like I love all this stuff and I want to keep promoting it. But like, man, I know how valuable what we have is right now. And it keeps me up at night just thinking about this stuff, replaying these streams and thinking about what we talked about. Like everyone that's in right now is going to see absolutely life-changing events take place over the next couple of years. And it's hard to wrap your mind around it at this point, but like I see it. I see where we're heading.
Definitely.
Yeah, it's true. It's fun because on the health, even on the health side. So I mean, even after these streams end, like it's basically like still it's
you gotta wind down. Like you gotta come down like 8 pegs before you can even think about going to sleep.
Right.
Yeah, it's something else. It really is.
I really do think that. All right, let's just say this market only tops out this year. We'll probably get a 55, 80 cent.
Boo. What happened, Moon Math?
Here's the Moon Math. It's because
all right, go ahead.
Let's just be. I'm just trying to be for real. Like I'm a realist.
Yep.
If we hit 55 cents, 40 cents, 80 cents, a bunch of motherfuckers are going to sell Hex. It's just going to happen. There's just no fucking way you can stop it. There's no
100%.
So if that ends up happening, if that ends up happening, right? So it will end up happening is a bunch of stakes get unstaked, right? Like just like I said, right? Then after those stakes are out of here, right? Then when we start getting into the next part of the cycle, whether that's in 22, then we'll go to $1 plus because there's less selling pressure. Of course, there's still big guys holding big liquid bags, but in terms of the kind of free Hex you can essentially get and stuff, it's like there's nothing there, you know. Then that's I mean that's kind of the whole thing, and then people burn their stuff out, and then they try. Then what's going to happen is people are going to rebuy back their bags.
Yep.
So it, you know, it's
we will see numbers that we cannot wrap our heads around, and again, it's that regency bias, especially since we've been here since the beginning. We're so close to the project. We've seen it from start to present. So it's really hard for us to wrap our minds around these numbers because when we look at our bags and we multiply it to the price that this will be one day, you've just never seen any amount of wealth like that in your life out of working since you've been in the workforce, since any assets you've ever invested in, anything, like nothing. Not only does it even like, it doesn't even come close. Like you're talking magnitudes of 5, 10, 100x of anything you've done in your life to this point when it comes to financial wealth. You have a hard time putting that in a sense of reality. And so we have trouble, even the ones that we know that it's going to be successful. You just really can't put yourself in a place where you might be sitting on $100 million right now and you don't even know it. You just, it's hard because none of us have seen money like that in our life before. So when you have something that far from your current reality, it's very hard to actually put yourself there.
Right. And then, damn, dude, like this one. Now I remember what I was trying to say. So Ryan kind of put this in my brain a little bit in terms of he just reminded me of this. Like, I remember I had said something really early on in Discourse Syndicate where I said 80% of all the money made in Hex is going to be made by 20% of the stakers.
Mm-hmm. Yeah.
Like right now, a lot of people have stakes, and people are going to emergency unstake stuff, take profit, and after that, most of the money it's going to be made by the guys who can essentially hold their longer term stakes. I'm talking about like year 2024 upwards. If you're able to hold those stakes and just, I'm not playing the market anymore. I'm just, when my stake comes, I'm done. I'll decide to spend some of it or I'll restake it. You won. I mean, literally, if you just make it past the cycle and Hex survives and we make it out of this bitch, whew, we won. That's it. I mean.
Yeah. And that's like what Looking Into Crypto was talking about earlier with like Kareem and he's got his dream accounts and he's got some earlier stuff too. So you always got to bring that in point, but he has a very well-paying job. So like this isn't even on the table for him to take off right now. And it's if you're in that kind of position, it's again a very good position to be because you can maximize the benefits of Hex. If you don't need the money, don't take it off the table because you're really taking something off the table that's going to change your life to magnitudes that you've never seen before up to this point. So like it puts you in a prime position to be, you're going to be successful regardless, but it's just going to be to what degree. Are you going to be able to just help yourself, which is good and all, but can you then reach out and help your mother? Can you help your father? Can you help all your siblings? Can you help your cousins do whatever they want to do? Can you reach out further than them? Can you help out their children? Can you send people to college that maybe can't afford it? Can you help people start businesses? Can you help take care of people that might be sick? Can you do all these things, this philanthropy that you can spread? Can you be the good in the world that you want to see? Do you have that kind of economic mass to, they want to talk about money doesn't buy you happiness. It can buy you things that bring that happiness into your life. And a lot of that's going to be taking care of ones that you love or just people in general. And your Hex can potentially give us so much more happiness than we realize, just putting us in those kind of positions where we can help those ones that we really care about and just humanity in general, not to get too sappy or anything like that, but it's weird because I never even really thought about it until as I kind of just speak it into existence now. Like, you can change so much more than just your current status in life. It's just how far are you willing to take it?
That was deep, dude.
It was very deep. It's the booze. Yeah. It's the booze. It's the booze.
Yeah, well, it is true though, because the like basically whenever you look at how the world shapes out, basically it all boils down to money in the end. So money determines the direction and like fate of the entire world. So if you ever get to a stage where you have like a like economic mass, like you can actually do things. You're now like in a position where you can actually do things that are like net positive for society. Like the fact of the matter is, very few people in the world are the ones that are responsible for like really drastic changes like to society and just how the world operates. It's a very small, it's a fraction. It's like if you look at the investor class in general, you have a small percentage of people make money in, let's say, these market cycles, and this goes for every investment class: cryptocurrency, equities, everything. And then on top of that, if you look at the world as a whole, there's only a fraction of those people that actually make like a real difference in the end. Like, I know this is philosophical, but it's true. Like, the fact of the matter is, most people, like, they don't, just the nature, like either their situation or just however things came about, like most people basically live their life, and then you have a small decimal or fraction of that changes basically everything, like forever. So you see it, for example, with like what Elon Musk is doing with like Tesla and SpaceX. Like the reason that has so much value is because it boils down to a belief system. Like, people believe in the technology, and it's progressed forward massively. It's pumped a lot like crazy over the last year. So, and then basically that economic mass, which I do think is very like, there's some really interesting stuff with that Richard Hart's working on with like SciVive, and that could potentially leapfrog into things like, it almost sounded like it leading to some kind of like biotechnology in a sense. But basically that door is opened, and like, that is basically change that forever, like benefits the world like in a positive way. So it gives me a different perspective on things, because like truthfully, like when I entered this market, like the main objective, and that is like really the main objective, is like you make a lot of money, but then when you get to a point where you, let's say, have this economic mass, can you actually, the next level is, can you actually do something with that money that actually benefits the world? And most people can't. Like, there's basically limits certain people get to, and that's just the way it is. But it does boil down to, like, at the end of the day, once you have the money, what are you actually going to do with that money? I mean, there's of course, like, you definitely want to enjoy your life, your family, all that, take care of your loved ones. And then really the next bar is, can you basically do that and make like a world, a life, like just a world defining change with that economic mass?
Just scale it. That's all it is. DC.
Yeah.
It looks like he was about to.
Yeah. I mean, this money gets. I mean, once you get to that crazy level of money, you can handle everything. You got your family taken care of. You can just start helping people. And then Chamath has a really important thing where, like, the reason you make a lot of money is so you can essentially start affecting the world in the way you start seeing it, right? So, I mean, the more people that have more money, the more things will just end up happening, man. And hopefully, like, it's just good people that end up doing stuff. So fuck yeah.
And it is like, what better community than Hex? Like I was saying earlier, we've somehow had this anomaly where a bunch of very like-minded, I would say, very very amazing people that are not out necessarily for their best interests. Yes, at the end of the day, it's price increase and all this stuff, but like, with that wealth comes a lot of people that are very good people that now can touch other people's lives on scale, and it just spreads from here. So we're kicking off a kind of a revolution of, like we've talked about, just kind of a wealth transference. And in my eyes, it's going into the hands of a lot of people that are actually very good people that I would call friends and borderline family that are going to do a lot of good things for a lot of lives around them. So like it's gonna go to some pretty amazing places in the future. I really do think so.
Yeah. And it's like if you look at because like in terms of like when you get to a point, well, I'm personally, well, I should say when I'm not at this level yet. Obviously, like if everything's a work in this progress, but I could be. I absolutely could be, and that's why I have the staking ladder, and I'm bumping those out because I really do see that as an opportunity to like get to that point, and I recognize what my skills are. Like I know how to be true with myself to recognize like what my talents are. And what isn't. So I don't try to pretend to have certain skill sets that I don't have. Like for example, if you look at like engineers that are creating like new cool gadgets for society, things like that, that's a certain skill set. Like if you look at a mechanical engineer, for example, the really good ones, like the really good mechanical engineers that I truly call, let's say, a mechanical engineer, they have a way to basically generate like 3D models in their head and then basically create things that people use that are actually useful. So that's that change. That's a net positive for society. It just progresses things. Like you have humans have more tools to use as a result, and that's an incredible skill set because most people can't, like, they don't have, like, let's say the imagery in their head to create these complex like shapes and stuff in their head and then generate that into blueprints that end up translating into a real design. And then you have other skill sets, like if you look at investing, like you have psychology, so understanding like human emotions. Like I would say investing is much more geared towards emotional intelligence. Like emotional intelligence is a very large part of investing in general because that's what paves the way for like a long-term growth and success in terms of wealth. And then there's basically ways to recognize, like, if you're, let's say, really emotional, there's ways to improve on that and then make certain decisions that will perhaps like minimize like your emotions and things like that. But the fact that you recognize that already puts you ahead of most people that are going to react emotionally. So most decisions that happen in life, the large majority happen based on emotion. There's not like an objective reasoning that happens to it to, let's say, get from like point A to point B. And that's why most things fail. But when you look at, but then once you start to combine like certain skill sets, like recognize what you have, when you have economic mass, like, you know what you can bring to the table, but then you also know what else you can perhaps bring to the table because you have the economic mass to do that. So you introduce 100%. Other skill sets, and then you can create something incredible for the world that just wasn't possible from you alone. But it's the aggregation of all those skill sets, which you need the economic mass to do that, to make that world-changing impact.
And that's kind of like a great point to end it on, right? Because like Richard Hart talks about this, and he's a very intelligent individual, and he knows a lot about a lot of different subjects. But at the end of the day, he's not going to be a specialist, right? Like when it came to design to Hex, he could put his inputs, he could put his knowledge in, and he could contribute. But when it came to actually writing the code and stuff, he wasn't going to be the main dev. And it just goes like that with any sort of investment vessel. It's all about who you surround as your team. And just like you said, you know what you're good at. I know what I'm good at. DC knows what he's good at. And then we get to build a team around of ourselves that we know that fill in those weaknesses of ours, that fills in those gaps that maybe we're just never going to be to that level good at that certain skill set. Or maybe it's just something we cannot dedicate enough time to get to where it needs to be. But that's at the end of the day, that's where the economic mass comes into play, where you can bring on those members of the team that fill those holes, and then pretty much makes you an unstoppable force in whatever you're trying to accomplish, whether it be sci-fi, whether it just be bringing in good into the world, you name it. Essentially, the world's your oyster. Once you assemble the right team around you, you can't lose. You can't lose. And then that's what something like this gives you the ability to do. You can bring in those skill sets and those factors that maybe you can't bring to bear yourself as an individual, but you can bring the team forth that can actually accomplish what you guys are trying to do. and it's just something that you might not be able to bring to bear today, but that might be something in the future that you're able to do because of something like Hex. Boom. We out.
Boom.
Boom. Boom.
All right, man. Where can people find you, Motley Investor?
So everything should be pretty much Motley Investor on Twitter. Not active on Instagram, but Twitter, YouTube. I'll probably have to link. I'll probably have to do a thing because Motley Fool comes up all the time on with my YouTube. But mainly Motley Investor on anything, it'll come up.
Perfect. And look into crypto?
Yeah, so you can find me on Twitter and YouTube. Look into crypto. I think it should be like one of the first results on each of the social media outlets. So
perfect, man. Cool, man. Follow me, dollarcostcrypto. I'm dollarcostcrypto everywhere, and man, be on the lookout. More stuff coming. All right, peace.
That's right.
All right.
Bye.